All right, dang. So there we go. The market is really red right now. And yo, what's up for you guys watching this on the YouTube replay? We're going to be looking at my entire stock portfolio live. And then I got a stock of the day I want to share with you. And then we'll look at some of your stocks that you leave in the comments. So check this out. Here is our main portfolio right here. We are down 0.5% overnight market. And as you can see, just everything is down right now. Google's down 1, Meta's nearly down 1. And if we go to the, watch list down here, the S&P 500's down 0.4, the Qs are down 0.5. We also have a Roth IRA. We can check how that's doing. Yeah, just as I thought, this is down 0.91%. Let me go check out the dividend or my growth portfolio right here. So let's see, is anything up? So Clear Secure is up, but yeah, pretty much everything in here is red. Definitely don't listen to me. I got a lot of losers in here, like Zoom, UiPath, T-Mobile. This is my most recent purchase, actually. This is a stock I've been buying the dip on. I want to do some analysis on them in a little bit, but I want to share with you the stock of the day. And this is one I think is at a very good, very fair valuation. I want to go ahead and share this with you. And this is TAP Molson stock. So check this out. If you'd like a dividend stock, this one has a 3.91% dividend yield, and they trade at 9 times net income. So they trade at a super low valuation, 9 times net income. And check this out. They're making easily like 300, well, probably like 280 million of net income every quarter. So imagine that. They make 280 million on average of net income every quarter. And look at this. The dividend only costs 99 million. So here's a company with a near 4% dividend that the payout ratio is less than 50%. And also check this out. If we go to their stock buyback program, this is why I love the company so much. Ticker symbol TAP right here. If we go to the total common shares outstanding, look at the bottom left right here. As you can see in 2025 Q1, there are only 202 million shares. If we go back to 2021, there was 217 million. So this company has literally bought back nearly 5% of the company since the previous year. So this is a really cool dividend growth stock that does a lot of share buybacks. It's just a shareholder-friendly company. So that's ticker symbol TAP. That's one I've kind of been buying into. But yeah, here's all the other stocks we own in here. Oh yeah, and then I want to give you an update on my Moomoo buy and hold portfolio. So check this out. Yeah, here's our Moomoo account where once I buy a stock in here, I try and just hold it for the long run. And yeah, if you guys got any stocks you want me to look at, let me know. I'll give you some analysis on them. And check this out. Here's all the stocks that we own in here. I got some good growth ones like Amazon. I think this one's going to be a winner in the long run. I think this is going to be the first like $5 or $6 trillion market cap company. I mean, Amazon's so innovative. If we check this out, like their Amazon Web Services, the cloud business is so huge at Amazon. It's literally now for the full year 2024, over $100 billion of revenue. So Amazon is such an impressive company. And also the best part about Amazon is actually the net margin expansion. So check this out. The net income on Amazon was up 65% from the previous year when the revenue was only up 8% from the previous year. So what does that mean? That means they're expanding their net margin. So they now have an 11% net margin, and it grew 50% from the previous year. So yeah, double-digit margin now. Great news for Amazon. That's why I've been buying them. And also another stock you've probably never heard of before. This is Coca-Cola Consolidated. I've bought them all 3 of the past trading days. I've been loading the boat on this stock right here. Very good valuation. 16 times net income. Yo, what up, Mac? How's it going, man? This is kind of the valuation I like to look for in a company. And also, the reason they're falling so much is because of this net income decline. The net income fell 37% year over year. But that was kind of a one-time adjustment. There were fewer selling days than the previous quarter. So it was just a tough adjustment. So anyway, I've been loading the boat on that company right there. But yeah, let's go look at these stocks right here. Someone said AMD. Yo, AMD is one I do own. I am down on them. Or no, I think I'm up on them now. Check that out. We're up 1.63% on AMD stock. We were down on this company for the longest time. So check this out. Here's our 12 shares that we own. Our average is at $124 a share. So yeah, AMD is kind of like the NVIDIA competitor. So let's go check them out. I do own this one, so I might be a little biased, but check this out right here. Here's what I love about AMD. They have a huge GPU market share. Check this out. AMD has a 16% PC GPU market share. That's really impressive. And also check out the free cash flow. That's what FCF stands for. The free cash flow is going like crazy. Free cash flow grew 91% from the previous year. They're printing net income. Actually, this is now a big data center play. Check this out. If we look at where AMD's revenue come from, 50% of this is actually from AMD, and it's up 57% from the previous year. So nice growth on the data center business. So AMD is one one that I think is just going to be a winner in the long run. And look at this balance sheet. I mean, this is incredible. They have no net debt. I mean, the liabilities are so low there. Yo, what up, Joe? Joe and Joey's in the chat. What's up, man? He said, did you buy not Meta stock, but he said Zeta. So you know what? Let's check out Zeta right here. So this is a what's the market cap? A $3.3 billion company. So not that big of a company, but they were up 12% the previous day. Let's go check out the fundamentals here. I like just showing you the numbers for yourself so you can kind of draw your own conclusion. And check that out. Look at that. The revenue is up 38 or 36% from the previous year. You know, that's really impressive growth. I wonder why the stock is down so much because I mean, they slightly missed on net income, but that's no big of a deal. I mean, the free cash flow is up 83%. Net income's up 45. I mean, they're starting to get net income positive. They're barely losing any money anymore. So actually, Zeta, I think this one is probably undervalued. Again, not a financial advisor, but that one actually looks very attractive. You know, the balance sheet's gotten a lot better from the previous year. Yo, ABC, what up, man? He said ticker symbol WU. Let's check that one out. Yo, then we'll look at ZA stock. What up, Joe? So here's Western Union. Oh, dang, look at that. This stock is at an all-time low right here. And yo, Ani, if you want to get this software here, actually, I'll give you the link right here. If you go to the link tree in my bio, the very first link, you can use the software I'm using. But anyway, let's keep going here. So here's Western Union stock. Let's check out they don't pay a dividend. Okay. So Morningstar has this as a $17 stock. Analysts have it at a 10. So consumer money. Okay, so this is probably why the stock's gone down so much. I mean, look at this. The business has just declined. I mean, in 2018, there was 4.45, and now it's at 3.8 billion of revenue. So the business just isn't growing. That might be why the stock is doing so bad. Are they profitable though? So they are profitable. That's the good news. That's why I would probably I wouldn't be too worried about the stock being at all-time low because they're not going bankrupt, that's for sure. But yeah, they're making over 100 million of net income a quarter. They are a bit leveraged. Yeah, they do have a lot of debt. So I would be a little careful with this one. But actually, no, they do pay a dividend. Hold on. They got it. Whoa. Hold on. They have an 11% yield. I do wonder if that's sustainable, but that's cool. They're an interesting stock right there. Do you think stocks will crash tomorrow? Yo, what up, baby? So let's see. So here's my portfolio. We are down 0.61%. So, yeah, look at that. Meta's down nearly 1. Google's down 0.85%. So, yeah, the market's probably going to be red on Monday, but not too bad. I mean, the SPY's only down 0.4. Look at that. Tesla's even green. So, we'll just see tomorrow. Yo, what up? Let's see. So, is this actually a real stock right here? So Zaha Energy Group, let's see. So look at the candles. So there's no volume on this company. So I don't believe this. I've actually never in my life seen a company with this small of a market cap. So if you look in the top right, this whole company is worth $1.3 thousand. So I'm sure most of you in your bank account have more than that. So yeah, definitely don't buy this company in my opinion. The whole company's worth $1,000. I mean, are you live? Yo, what up, Hogan? Yes, sir, I am live. How's it going, man? Yo, Adrian, what's up, dude? He said QBTS. That's the huge quantum play right here. Yeah, if you guys got any stocks you want to look at, let me know. So here is ticker symbol QBTS. So this is D-Wave Quantum right here. Oh, there we go. So D-Wave Quantum, look at that. The momentum on this stock has been incredible. And I know they just beat like crazy on earnings right here. So if you look at the actual analyst expectations, the analysts were expecting 10 million of revenue. It's kind of like that orange line right there. But they reported 15 million. So, yo, Vaki, hey, if you go to the link tree in my bio, very first link, if you want to get the software I'm on right now. But anyway, look at that. They're beating on expectations. They beat on net income by over double. They beat on EBITDA. So from an earnings perspective, they're beating on earnings, and just the quantum space has just had so much momentum around it. So yeah, if you're looking for a quantum stock, QBTS is one of the main quantum movers. Actually, I can go to the quantum watch list over here. So let me actually find that. I think it's, yeah, quantum computing, Google, IBM, these are going to be obviously the main winners. They have the money and the talent to, be the industry leaders, maybe even Honeywell as well. But yeah, QBTS, they're a smaller cap that could have some more upside. Yo, what up? Mackie said TTMI. Let's check out this stock right here. And Marathon, yo, we'll check out MARA as well after this. And we'll look at VOO. What's up, guys? Yeah. Happy Sunday, by the way. So $3.8 billion company. Look at that. The stock is at an all-time high right now. Dang, Matt, congrats if you own this stock because, you got to be up on your position. So Printed circuit boards. So, hey, that sounds like a niche business, and the business is up 15% from the previous year. So, the circuit board business is doing great. Look at that. Taiwan is 11% of the revenue. So, let's see, are they profitable? Yeah, look at that. They're making money every single quarter. So, that's actually great news. This is a profitable company. Sales are up double digits. Pretty safe balance sheet as well. So, this is an interesting stock, actually. And they're at all-time highs as well. So, congrats if you own them yet. Yo, Musa, hey, yeah, if you want to use this platform, if you go to the link tree, it's the very first link there. How's it going, man? It's a software. So MARA, this is basically a Bitcoin mining company. So I love the Bitcoin. I love Bitcoin, by the way. So I love Bitcoin, but this is the unfortunate part. This stock does not keep up with the price of Bitcoin. Bitcoin is like couple percent off all-time highs. This one is like 50% off all-time highs. So that's the only unfortunate part about this. You're mainly buying them for the balance sheet. They have this really good balance sheet where they just own Bitcoin. That one really just follows Bitcoin. I'd probably rather just own Bitcoin though. So, Dryden, how's it going, man? Happy Sunday. So he said ticker symbol VO. So yeah, this is just the S&P 500. It breaks your money up for you into the top 500 US companies. Check this out. Did you know Microsoft is actually the largest company in the world? You know what? I'll show you that for yourself. Oh yeah, here's my really risky portfolio. Definitely don't listen to me. I just like being fully transparent with my portfolio. But check this out right here. If we go to the mega caps, the largest company is actually Microsoft. Look at that, 3.55 trillion market cap. Then it's Nvidia, 3.5. Apple's the third at 3. So this is just a market cap weighted S&P 500 ETF. It's Apple, then Amazon, Meta, Google. So VO, great ETF to just buy and hold for the long run. I agree. What are the best AI stocks? I really like Google. Yo, Givers, hope you're having a great Sunday. I appreciate you, homie. So WOOF. So this is Petco Health and Wellness. So look at that. This is unfortunate. So this stock is close to an all-time low. So let's see if we can figure out why they're at an all-time low. So the whole company is worth $800 million. So that's a very small market cap. And yeah, look at this. Their consumables revenue, it's just not growing. It's actually, negative growth. It's down 2% from the previous year. Supplies, look at these year-over-year declines. So the business is just declining. And that's the unfortunate part. Are they profitable though? So they're actually, this is the good news. They're getting very close to profitability. Like they're only losing like 10, 20 million a quarter, and the trend is getting better. But this sales growth decline isn't great, and it's probably why the stock is at all-time lows. They're still losing money, and the business just isn't growing. But the good news is they're barely losing any money, so I don't really see them going bankrupt. But yeah, that one, it's tough because they're a small market cap. So yeah. Big Bear AI. Yo, Adrian, how's it going, man? So BBAI. So this company, here's the thing with this stock. So if you look at the market cap in the top right, and the market cap is just how much the company's worth. So this whole company is worth $1.1 billion. So remember that number. This whole company is worth $1.1 billion. And look at this. Here's kind of the bad news. In the past year, they've lost over $200 million. So they've lost nearly 18% of the entire market cap just in the past year of net income. So you want to see this company get net income positive, and the sales aren't really great. I mean, the sales are up 5%. So they actually missed on expectations. Like they were expected to lose 5 cents of EPS in the most recent quarter. They actually lost 25 cents of EPS. So that's kind of why they gapped down on the most recent quarter of earnings. So yeah, yo, BMAX said, hopefully my mic is still working. Hold on a second. I kind of just really hit it. Okay, sorry about that. BMAX said any momentum trades for the morning. So one of my most favorite momentum stocks right now is ticker symbol POWL. I do own this one right here, but this stock is well off its all-time high. So here's why I really like this one. So Hogan said, why is the market red tonight? It's because of the geopolitical stuff, with the, I don't want to get into that, but basically geopolitical fear. So anyway, this company, I believe, is really undervalued. So if you look in the top right, they're only a $2 billion company. And look at the PE ratio. This company is trading at such a low valuation. They're trading at 12 times net income. and the industry average is 31. And the best part about this company is the margin expansion. And by the way, I might be biased. I do own this one. I own 12 shares. I own 12 shares of this stock. But here's what I like about them. If you look at the net income, it grew 38% from the previous year. So this is huge net income growth. And if we look at the revenue is only up 9%. So this is a company expanding their net margin. So if we go to the net margin right here, it's up 26%. So that's what's so great about this company. They also have no debt whatsoever, $400 million of net cash. This company, by the way, they pay a dividend. Again, the dividend is only 0.6%, so not a huge dividend, but the dividend only costs $3 million of net income a quarter, $3.2 million. And look how much they're making. They could pay for the entire year of dividend just in the most recent quarter of net income. So that's a dividend growth momentum stock I really like. So anyway, Michael, what up, dude? He said HIMS, dude, this is another great momentum stock. There's no AI here, but they're a healthcare weight loss play. So check that out. They're near at an all-time high right now, and I believe this company deserves it. So you guys won't believe this. Here's what I love about this company is just the growth. The revenue is literally up 110% from the previous year. So the revenue has literally more than doubled since the previous year. So check that out. The revenue is more than doubled. And also so is the profits here. The free cash flow is up 300%. They're making, $200 million plus of free cash flow a year. The net income's even better. They're going to be making $50 million plus in net income a quarter. They also have no debt. I actually added, they're in my no debt watch list right here. If I go to my watch list right here, these are all stocks with no debt. You've maybe heard of some of these like GameStop. Did you know GameStop has literally no debt? Yelp, Reddit, Duolingo, Pinterest, Opera GX browser, this Chinese trash. But anyway, these are all debt-free companies that I kind of have on my watch list here. And if you guys got any stocks you want me to look at, let me know in the chat. I'll check them out here. So I have calls on Amazon and Apple expiring. So yeah, I forgot to look at Apple. Someone else has said that. So yeah, here's Apple right here. I really like this company. I'm on an Apple device right now. A lot of people are locked in the Apple ecosystem, third largest company in the world. And check this out. We can see their smartphone market share. Apple has a 19% smartphone market share, which is crazy. And look at that. Literally half of Apple's revenue comes from just the iPhone. And the next highest margin part of Apple is actually the services business. If you go and buy anything on the App Store, Apple will charge a 30% fee, and it's all nearly 100% margin for the company. And look at the services revenue. For the full year 2024, it was $96 billion. So I expect this to be over $100 billion easy for the next year. So, then there's the Mac revenue, wearables like the AirPods. Here's why Apple's so affected by tariffs. I just like showing you all the numbers. Look at that. Did you know only 36% of Apple's revenue comes from the US? I always thought it was a lot more, but only 36% of Apple's revenue comes from the United States, then 25% Europe, then China, then all these other countries. But anyway, that's why Apple's so heavily affected by tariffs, because it's the largest segment of the revenue, but only 37% of the revenue. Where do you think the markets are headed tomorrow? Well, we can see the overnight market right here. If we go back, our portfolio is down 0.5%. We can see Meta's down 0.7, Google's down 0.7, and just the QQQs right here, QQQ's down 0.69. By the way, this is my dividend growth portfolio. Every stock in here pays a dividend. Here's my total percent change. So luckily we are up on every stock, but we're barely up like on Google. We're just up 2% on them. McDonald's, we're just up 3% on that company. So, some of these are, we have a Roth IRA as well, a very small Roth IRA. But anyway, let's get back to the analysis. I know oil stocks are going to be printing tomorrow. I know Buffett's going to be happy about that. Yo, Bulls, what's up, dude? He said, Google, I'm going to start a position in them. Yo, I think that's a great idea. Again, not financial advice. I do own Google, but I think this is a great just buy and hold for the long run. No real reason to sell out of them. It'll be a good dividend growth company. You get a 0.5% dividend yield with Google. And look at this valuation. This is what's so cool about Google. The valuation is dog cheap, literally 18 times net income. They are the cheapest Mag 7 stock out there. And, a lot of people are worried about Google, like AI is going to, LLMs are going to come for their search business. But for right now, Google's printing money like ridiculously. Look at this net income right here. $34 billion in the most recent quarter, up 45%. So look at the revenue right here. The revenue grew 12% year over year. So that's pretty good growth, double-digit revenue growth. But look at this net income. It's up 45%. So the most impressive part about Google is actually their net margin expansion. They now have a 38% 30% net margin. I mean, this company's killing it. They're crushing it. Look at this EPS. Analysts were expecting $2. They reported $2.80. Anyway, I agree with you. I think Google's something they're at a fair valuation. I think analysts are wrong about LLMs coming for their search business. They own YouTube, they have their own quantum chip, they own Waymo, which does over 250,000 weekly rides. Has anyone heard of Waymo before? Such a cool company. So anyway, let's see. American Airlines. Yo, Matt, what's up, dude? So I don't love the airlines. Here's the thing about the airlines. They just don't outperform the S&P 500. No airline has outperformed the S&P 500. I mean, look at this stock. I actually don't believe it. American Airlines is $1, $2 off all-time lows. So again, this is a travel play. I just don't expect American Airlines to outperform the market in the long run, but it could be a short-term swing trade. I mean, look how choppy this money is. I mean, they're making money, then losing money. The numbers are just inconsistent. So anyway, I just stay away from the airlines. If I was going to buy an airline, if I had to pick an airline, I would buy Delta Airlines, ticker symbol DAL. But hey, what up, Bailey? Yeah, yes, sir. Appreciate you. Happy Sunday, everyone. So someone said, what are some oil stocks that could potentially go up? Let me show you this right here. You know what? I'm going to show you Warren Buffett's portfolio. So if we go to Buffett's portfolio right here, these are literally his main holdings. He's a super investor. Since he has over $100 million net worth, literally by law, by SEC law, Warren Buffett has to reveal every stock that he owns. And here's some of the oil stocks he owns. CVX, Chevron. 6% of Warren Buffett's portfolio is in Chevron. So if you're just looking for an oil play, this one's going to print tomorrow. I can almost guarantee it. Again, not financial advice here, but look at the yield you get. Even if you just buy this stock right now at all-time highs, not including the stock price appreciation, you get a 4.4% dividend yield. So you get 1% of your money back a quarter, in a qualified dividend, and they raise their dividend every year, on top of the stock price appreciation. So Chevron's a cool one. Another one that he owns is Oxy Petroleum. This is they do like more clean energy and they like pipelines and stuff. I haven't looked too much into them, but anyway, that was Buffett's portfolio. Let's keep going here, looking at some more stocks. So, what do you think about SoFi? Yo, dude, let me go back to my growth portfolio here. Again, not financial advice here, but one of the stocks we own is actually SoFi Technologies. Check this out. We do own 24 shares of SoFi, and this is a fintech, a fintech. So if we go to SoFi right here, they have their own banking charter. Here's why I own this one, and I think SoFi is just going to continue to win. I'll just show you the numbers for yourself. Here's why I believe that. If we look, they're a fintech, so if we look at their financial services revenue, this is so important. The growth here is off the charts. This is why I love SoFi. The revenue has more than doubled, well, just over doubled. It's up 101% from the previous year. I mean, look at that growth. It hits a new record literally every quarter. What about on an annual basis? I mean, look at that revenue. 2020, literally 11 million, then 50. I mean, and now it's 820 million. I mean, hats off to SoFi. They're really growing their financial services. And if you look at their main business, lending, let's see how the lending revenue is doing. If you look at the green number right there, year over year, it's up 25%. So SoFi is just a great growing company. People are starting to take them real serious. Look at this net income. They're making net income every single quarter. Very profitable company. So anyway, they used to lose net income every quarter. So SoFi is, I believe, just going to be a winner in the long run. And I do own them, so I might be biased. But hey, thanks for the follow, Bailey and Lud Dog. I appreciate y'all. If you want to support me, the best way to support me is to subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's in the link tree in my bio as well. Robotaxi is supposed to go active tomorrow. Will it boost Tesla? That's a good question. I heard they're going like in Austin, Texas. So I want to look at this stock. Wreck-It Ralph, what's up, dude? He said COOK stock. I didn't even know that was a ticker. So this is Traeger. I don't know. I've never heard of this one. So very small company. This whole company is worth $230 million, and they're at an all-time low right now. So I feel bad if you own this stock. Because they're at all-time lows. Like, look at that chart. It's not great. But, they sell grills. This is why I like looking at what they sell. So this company literally sell grills. And, hey, the business is actually doing pretty good. This is unique. The grills business is up 12% from the previous year. Consumables, down 6%. Accessories, down 26%. Let's go see, are they profitable? Ooh, so that might be why the stock's at all-time low. They're still not profitable, but they're barely losing any money. Like, they literally lost $700,000. That's like the least amount of money ever lost. So they're actually super close to profitability. But, a company that sells a commodity, they sell grills. Hey, that's a cool ticker symbol. Ticker symbol COOK, and they sell grills. That's interesting. Acutenture. Yo, Matt, what's the ticker symbol for that one? I'll check that one out. And Aiden MC said SMLR. What's this company? So similar site. Oh wait, oh it went away. Sorry. Scientific stock. So let's see. Another small cap. So yeah, I don't love the small cap. So they're only worth 400 million. Extremely small company. But let's see. Is there any value here? I just like looking at the numbers. There could be something I'm missing here. But ooh. This is the bad news. I mean, the fundamentals aren't really too great here. I mean, look at that. The revenue is only 8 million and the revenue is down 44% from the previous year. And and look at that. So they used to make net income every quarter and they actually lost money in the most recent quarter. So I'm actually surprised the stock isn't down more. But I mean, to be honest with you, nothing's really blowing me away here to really want to buy this stock. I just be careful. It could be a good momentum one. Thoughts on CRISPR? Is that CRSP? That's CRSP. So this is CRISPR Therapeutics. This is a Kathy Wood stock. They do gene splitting. They're like a niche industry. Oh, yo, then we'll look at defense companies like Lockheed Martin. Yeah, we'll look at Lockheed Martin. So CRISPR Therapeutics, I think this is a revenue-less company. So if you go to the revenue right here, yeah, so this is the thing. They're basically a startup. Like, look at that. There was 800,000 of revenue in the most recent quarter. The quarter before was 35 million. And dang, they're losing like 80, 90 million of net income a quarter. So I'd be super careful with CRISPR Therapeutics. Just because they're a startup, they have a really good balance sheet. They have no debt, I believe, but they're losing like 80 million a quarter and there's pretty much no revenue. I mean, last quarter there was 35 million. I wonder, did they sell an asset to get that? They did. Look at the cash from investing activities. They sold 100 million of assets. See, this is why I like digging into the numbers. That's very interesting. So they're actually a revenue-less company. And the only reason there was revenue that quarter because they sold an asset. Where can we check the Warren? Yeah, Hassan, what's up, dude? Yeah, so we go to the Discover tab. I'll show you the Warren Buffett portfolio really quickly. Here's Warren Buffett's Q1 buys. Here's what he just bought. Actually, you can see the percent of his portfolio it is on the left. We were just looking at Chevron, Coca-Cola, but some of his smaller stocks, he just bought a position into MasterCard. He bought some Visa, Kroger, VeriSign. I've never heard of that company, actually. So anyway, that's Buffett. Let's see. Josh said SCHD, dude, this is a great dividend growth ETF. So this is the Charles Schwab Dividend Equity Growth ETF. So if we look at the yield, they have a 3.95% dividend. So you get in your 4% dividend with this company. So basically 1% of your money back every quarter. And look at that. Their top holdings are some of the like oil stocks like ConocoPhillips, Coca-Cola, Chevron, Lockheed Martin, Verizon. So yeah, these are all its top holdings. Pretty solid. Diverse portfolio. Like I'd happily individually own a lot of these names. And someone was just asking me about Lockheed Martin. So let's go check out Lockheed Martin. Yeah, improvement. Hope you're having a good Sunday. Happy Sunday, everyone. So, yo, Brandon, no way, dude. Brandon, thanks so much for all the little cats. I appreciate you, dude. I'll check that. Yo, Riggedy Computing, what's the ticker symbol for that one? I'll check it out for you. Thanks again for the roses, but let's check out Lockheed Martin. So this is an aerospace and defense company that should benefit from all the geopolitical stuff. Yo, Devish, how's it going, man? So look at the yield here. You get a 2.8% dividend. So first off, this is a good dividend yield play. And also the valuation is just low. Look at that. They're trading at 20 times net income. So that's not an expensive valuation. That's a fair market multiple. And look at this. Here's all the industries that they're in: rotary mission systems, missile fire control, space. So, they're an aerospace and defense company. And look at where the revenue comes from. Most of it's from the U.S. Then they have a little bit of international exposure. So, yeah, Lockheed Martin, I think, is a really good one. If we look at their net income, they had a one-time adjustment last quarter, but normally they're making $1.7 billion a quarter. Then they just pay half of that out in dividends, and then they do some stock buybacks as well. The company buys like 4 or 5% of the company a year. So, yeah, Brandon M., thanks again. It's RGTI. Yeah, thanks again for the 10 roses. I appreciate that, homie. So this is Riggedy Computing. This might be a quantum stock. So look at that one. I think I've heard of this one before. This is one of the main quantum stocks or quantum momentum companies. Let me double verify. So yeah, quantum computing and computer hardware. So let's see. Collaborative research. Let's see. So this is the bad news. If we look at the revenue right here, they don't have much revenue. So if we look at this from a financial point of view, it's not great because the revenue is actually down 50% and the revenue is only 1.4 million. And if we look at the most recent quarter, they lost 20 million. They're losing like 20 million a quarter. So they're doing a million of, so Here's the thing. This company has a $3.2 billion market cap. I think there's so many better companies for a $3 billion market cap with way more revenue, way more net income. That one's just huge quantum momentum. That one could still go up, of course, but from a value point of view, I'm not loving it just because the declines there, like a Powell Industries. This whole company is worth $2 billion. So this company has like 30% cheaper than the previous company than RGTI. And look at this net income they're making. I mean, like 40-50 million a quarter. Anyway, I would just be careful with that one. And I didn't mean to bag on your stock. If you got another stock you're going to look at though, Brandon, let me know. I'll check it out for you. And hey, Josh, no way, Josh. Thanks for the 10 roses, dude. Yes, bro. Thank you. Lockheed Martin play. Yeah, dude, Lockheed Martin, a lot of the aerospace and defense companies have been going nuts. But yeah, Matt, what's up, dude? He said ACN, Accutenture. So I think that's how you pronounce it. They just fell. Look at that. So they just like gapped down. I think they did report earnings. So let's go see what they reported. Let's see, did they really deserve to fall that much? So I was actually watching an interview with the CEO. How's Boeing doing? Yeah, we'll check out Boeing as well and FLXS. So they beat on revenue, they beat on net income, and they beat on EBITDA. That's so weird. They triple beat on revenue and they're printing money. Wow. They're making nearly $2 billion of net income every single quarter. So actually, I love the fundamentals here. And you get a 2% dividend with this company. That's incredible. I actually really like ticker symbol ACN. I'm going to add this one on my watch list, actually. So I'll add it to the watches. Yeah, 2% yield. Maybe there was bad guidance or something. I'm not sure why the stock is down. Maybe it was just a high valuation. I don't know. U.S. military defense companies will always boom. ITA, SHLD. Yeah, I heard SHLD. This is a huge global X defense ETF. So yeah, look at this, the defense sector, aerospace and defense. Look at this ETF right here. It's at an all-time high. And their top holdings, Palantir is actually a huge government contract play. Rainmetal, Lockheed Martin. Look at that. Lockheed Martin is 7.5% of this. So very interesting ETF. And hey, Josh, thanks for the donuts again, dude. I really appreciate you, homie. If you got a stock you can look at, I got you, homie. Thanks again. So let's see. How's Boeing doing? So here's another aerospace or defense company or aerospace company. Yeah, so this is Boeing. Unfortunately, they haven't done good since 2019. They kind of like trade with the airlines. They're down bad from 2019. And here's the bad news about this company from a financials point of view. They have not made a single dollar of net income in over 2 years. I mean, look at this. This is 2022. Negative 3 billion, negative 600 million. I mean, they've literally not had a single net income positive quarter in 2-3 years. So that's the one reason I don't like Boeing. And look at the super leveraged balance sheet. They actually have more liabilities than they have assets. You do get they cut their dividend, so they don't pay a dividend. So anyway, Boeing, this one, I think the future might be a little better with them because they just got like a bunch of orders from like China and the military. But I just can't see that one outperforming just the S&P 500 in the long run. Bailey said, do you think it's too late to get into Lockheed Martin, especially after the boom? I don't think it's too late. I mean, you still get a 2.5% yield. Yeah, it's not too terrible buying that company at all-time highs. FLXS. What's this company? Let's check. So Flex Steel Industries. So, hey, yeah, with these tariffs, we actually want to revive the U.S. steel industry. So let's see. Did this company sell steel? Let's see. So furniture products. Okay, so no. They just sell furniture products. Okay, well, are they profitable? So, not actually, yeah. So, I mean, if you average out the 4 quarters here, they are making net income. They did lose net income in the most recent quarter, but it was a one-time adjustment because they actually made $8 million. So they had a little one-time adjustment to their net income. No big deal. Yeah, this company isn't terrible, but they sell a commodity. They just sell furniture. Maybe a Restoration Hardware would be better. I don't know. How's Restoration Hardware doing? Is that RH? Anyway, but yeah, the furniture industry, that's interesting. It could go up. That'll actually probably soar whenever interest rates go down. And yeah, if you guys got any stocks you want to look at, let me know. I'll check it out. Matt said, I'm buying 10K of ACN today, hoping for a little gap down on market open. Yeah, I bet you the markets will go down on Monday. Because if we go to the S&P 500 futures right here, yeah, the SPY's down 0.4, Qs are down 0.6. Weirdly, hey, Tesla's green. Tesla's up 0.25. Is anything else green? ExxonMobil, yeah, dude, the oil stocks are loving this geopolitical fears and stuff. They're up 5% nearly. So, hey, that's interesting. Yeah, here's my dividend growth portfolio. Yeah, we're down 0.5%. Uh, is it possible to make a come up with $30? Hey, anything's possible. What's up, man? For the future wise, I would look into SoundHound AI. So yeah, let's check out SOUN. So hey, by the way, if y'all want to support me, check out my YouTube channel. My YouTube channel is called Nathan Robert. It's in a link tree in my bio, very first link or a second link there. So here's SoundHound AI. This is a great subscription company. So check this out. 85% of the revenue, so most of their business comes from their subscription revenue. And check this out. This is why a lot of people love SoundHound AI. The subscription revenue has literally 5x'd. It is up 585% from the previous year. So incredible subscription revenue growth. But if we look at their product royalties, this is the bad news. Like their high margin royalties are actually down 43%. So I'm not sure why that fell. But anyway, you're mainly buying this one for the subscription revenue growth. It's incredible. If it's up 500%, what's it going to be this time next year if they're growing 500% year over year? So yeah, you're mainly just buying this one for the revenue growth. They're deleveraging, which is great news. They're still not profitable yet. They're still losing a lot of money, but the growth should it's okay as long as they're having that high growth rate. So yeah. Well, Boeing Streamliner crashed recently into India. Stock was down. Oh yeah, that's true. I heard about that. That was so sad. I hope we don't go into a crash after this. Yeah, I don't think we'll go into a huge crash. I mean, the market is only down 0.5%. I mean, that's kind of like a normal day. I got some call options right now. The 24-hour market. A lot of my cash stocks are down. Yeah. So someone said MSTY stock. So MSTY, this is a covered call ETF. So basically this company just sells calls on MicroStrategy. And whatever premiums they make from selling calls, they pay to you in a dividend. So unfortunately, this company just won't outperform the market in the long run just because of the nature of selling calls. It won't outperform MicroStrategy. But I mean, look at that. They're down 30% the past year. But here's what you do get if you buy the stock. You get you get a monthly dividend right here. So you're basically buying MSTY to maximize your dividend income. And I love dividend stocks. Literally every stock you see right here pays a dividend. Google, even Google and Meta pay dividends. They're like dividend growth companies, but I love dividend stocks. But I don't really see that one outperforming. So Maz WOOF. So we were just looking at this one. So this is Petco. Has anyone heard of Petco before? That little like animal health company. So the stock is basically at an all-time low. Like, look at that. Stock's at an all-time low. Used to be a $20 stock. What's the market cap? $830 million. So they're only worth $800 million. And that's because, they're still losing net income. So they are losing less net income. So that's the good news. They're losing less net income than what they were, but they're still losing net income. So I would be careful with that. WOOF right there. All right, so let's see. I made the most profit when the market was down because everything's in discount and market recovers. Yeah, dude, that's what I agree with you, man. Hold on, let me pull this up. The time to buy the dip is when the market's fallen. So that's what I've kind of been doing recently. Here's some of my most recent purchases. Check this out. If you've heard of this company before, this is Coca-Cola Consolidated. And look at this. I've just been loading the boat. This company's on a dip. It's well off its all-time high of, $143. So I'm going to buy the dip on this company. Fair valuation, 16 times net income. So yeah. And if you guys got any stocks you want to look at, let me know in the YouTube chat. I'll read all of them. I'm streaming on YouTube and TikTok right now, so I do appreciate y'all. Make sure to hit the subscribe button. I'd really appreciate that. But yeah, Coca-Cola, this is what's so cool about this stock here. I'll be quick about this. I don't want to, if no one probably cares about this stock, but here's what's so interesting. Look at the dividend yield. They have a 0.5% dividend yield. So you get a 0.5% dividend yield, but look at the payout ratio to the right of that. The dividend payout ratio is only a 5%. They have such a low payout ratio. So you get a 0.5% dividend yield. The payout ratio is a 5%. That's a higher yield than Apple. Look at that. So here's Apple stock, one of the largest companies in the market. They have a lower yield, a 0.5% dividend yield. And look at the payout ratio. It's 3x higher. They have a 16% payout ratio. So Coca-Cola Consolidated is just a really cool company. So anyway, let's keep going here. Yeah, I'm going to try to purchase it on a discount. Yeah, hey, Moonstone, I got you. Yeah, I just try and show you the numbers for yourself so you can draw your own conclusion. I don't sell anything. I don't have a Discord, WhatsApp, Telegram. I don't have a course, a book. I don't got none of that. So I do appreciate y'all. Thoughts on Neo covered call ETFs like QQQI and you know what? Let's go check them out over here. QQQI. So this is just a covered call ETF. So this company just sells calls on the NASDAQ. They have a 14% dividend yield. So yeah, basically they just sell calls on the NASDAQ, whatever premiums they make, they give to you at a dividend. So, and you get it monthly. So look at that. Their most recent dividend payment was 63 cents. then 53. So it changes every month based off how much premiums they make from their covered calls. So QQQI, very interesting covered call ETF. Same top holdings as the NASDAQ. They just sell calls on it. The thing is, you won't outperform the NASDAQ in the long run just because of, again, the nature of selling calls, but you do get that high monthly dividend income, which is very cool. Yeah, United, my TikTok live. I don't want, yeah, they banned me. So, oh well. Yo, Devish, how's it going, dude? Yeah, here's our portfolio, by the way. Definitely don't listen to me. I'm not an expert. Here's some of my biggest losers like UiPath, Zoom. T-Mobile is one of my most recent purchases. This is actually, I've been loading the boat on T-Mobile stock right here. You can kind of, those little buy circles is where I've been buying the dip on this company. I think this one's going to be a great dividend growth company. I'm going to come back to them in a second here just because I really like T-Mobile. But let's keep going here. Devish said ticker symbol CARS. So cars.com. I've never heard of this stock. I've never looked at them ever. So cars.com, so very small company. So, okay, only a $700 million company. So very small market cap. And look at that. The stock has really trended down recently. I wonder if we can figure out why. Let's go look at their financials and see if we can figure it out. So, they're profitable. Hey, that's the good news. But yeah, revenue just isn't growing. The revenue is actually down 0.6%. This is not the end of the world. The revenue is just down 0.6%. And the net income went negative. It technically didn't go negative. It was a one-time adjustment, but the profits fell 50% from the previous year. It's just a small company, $700 million market cap. They're pretty much making like $10 million a quarter. So they're trading at actually a very low valuation. Yeah, look at that. They're trading at 16 times net income. So it's not terrible. I mean, Morningstar has this as a $17 stock. Analysts have it at 17 as well. So that's interesting. Could be a small one. Thoughts on Uber? Yo, what's up, Jack? Uber stock, dude, I love this company. Yo, Jeff Mack, hope you're having a good Sunday. How's it going, guys? So WDC, we'll check that one out as well. So here's Uber Technologies. I love this company right here. They're so innovative. They just bought a huge stake into Grab Holdings. But let me show you what I love about Uber Technologies. We can see their active users right here, literally 170 million monthly active users. So, and look at this. They have the mobility revenue and then the delivery revenue, which is like Uber Eats. Yeah, how's Uber Eats doing? Look at the Uber Eats business. It's up 18% from the previous year. I mean, that's really impressive. And, how's the delivery revenue doing? Or the mobility, how's the mobility revenue doing? That's up 15. So both businesses are going double digits. And you won't believe the free cash flow. This is what FCF stands for. It stands for free cash flow. And look at that. $2.23 billion in the most recent quarter. I mean, they're printing money. That's what I love about Uber. The net income as well. They're making $1 to $2 billion in net income a quarter. So Uber is now an extremely profitable company. I love Uber. And also, if we look at ticker symbol Grab right here, this is an Uber competitor. They literally do exactly what Uber does. So Grab Holdings does exactly what Uber does, but look at the countries that they're in. They're not in the US or Canada. They're in all these other countries like Indonesia, Malaysia, Singapore. They're in all these other countries. And if we go to the largest shareholder, this is what's so cool. The largest shareholder is actually Uber. So if you own Uber stock, you technically have a stake in the Grab Holdings as well. They own 13% of the business. Toyota owns another 5%. But this is great international exposure for Uber, and it was such a cheap price. They made $2 billion in free cash flow a quarter. They can just easily afford that. So, yo, what up? City said, "Don't trade. Trading will bankrupt you." Yeah, hey, I've heard. I can understand that. I sometimes swing trade, but mostly what I just like to do, I just buy and hold great companies. That's my, again, not financial advisor, but my best advice is just buy great companies for the long run and just never sell them. And preferably like dividend paying stocks, the dividend growth companies like Google and Meta, they have really low dividend yields, but they still pay a dividend. McDonald's, actually, let me show you. I just bought another share of McDonald's right here. Look at that. And because of this, you can see MCD dividend. These are the dividends I received. $23 dividend. So I love these dividend growth companies. Oh yeah, we also have a Roth IRA, very small Roth IRA, $1,200. How we're doing? All time, we're up 9%. We've literally had this for almost exactly a year in our Roth IRA. And we own some dividend stocks this year. When people trade maybe 1 to 2 months, I just love buying and holding stocks for longer. But I do sometimes swing trade. I have a really risky portfolio. Check this out. Like this one right here. This is my risk on portfolio where I try and buy stocks that I believe have a lot of upside in them. And it's worked out on a lot of stocks. Like Dave, we're up 160%. Robinhood, dude, this has been my best performing stock. We're up literally, this is like a call option. We're up 458%. We took so much profit on Robinhood. SoFi as well. But look at this. We've definitely underperformed the market. If you look in the top left, the open P&L, we're only up 4% all time in here. So I've definitely underperformed the market. But this is just what I found. Supermicro, Reddit, Futu, great company. That's Moomoo right here. Actually, FUTU, I want to look at this stock right here in a minute here. So I want to look at y'all stocks first. Let's see. MTZ. Yeah, no problem, Mac. If you got another stock you've been looking at, I got you too. I appreciate you being on the YouTube stream. Make sure to hit this. I'm streaming on YouTube and TikTok. Hey, for y'all on TikTok, make sure to head over to the YouTube stream. I'd really appreciate that. It's in the link tree in bio, first link there. So here's Maztec. Then we'll look at Mondelez. What's up, Devish? So this is a $13 billion company. And look at that. The stock's at all-time high. So yeah, congrats if you own this one. You got to be up on your money because they're at all-time highs. So they're a clean energy and infrastructure company, power delivery, communications, pipeline infrastructure. So I love how diversified that this is. Like they have like 4 main segments of business. They're all in the U.S., and they're really growing. So even though the revenue is only up 6% from the previous year, the net income is up crazy. It's up 135. Like if you zoom out to the previous year, look at that. The net income used to be so choppy. They made money, then they lost money. But here in the 4 most recent quarters, they've made net income every quarter. And that's real net income. That's great. I really like this stock actually. Let's see, engineering and construction. The margin expansion here is super impressive. So you know what? I actually do like this one. Even though the margins are, 1, 2, 3%, it used to be way lower. So if they can just grow that to like a 5% net margin, they'll be printing money. So anyway, yeah, MTZ is cool. So here's MDLZ. This is Mondelez. So this company owns Oreo. If anyone, everyone's heard of Oreo, like the little cookies. They own a lot of stuff. They own Sour Patch Kids. I'm not even going to, they own, Toblerone chocolate. Anyone seen that like square chocolate? They own Toblerone chocolate and Chips Ahoy. Anyway, let me show you the fundamentals here. I really love this stock right here. I like them more than Hershey's. They have a 2.7% dividend. So first off, you get a great dividend with this company. Yeah, so check this out. Here's the proof right here. Look at that. Half the revenue comes from biscuits and baked snacks, then chocolate. 34% of the revenue comes from chocolate. Then they sell gum and candy, cheeses and grocery beverages. So Mondelez is such a cool company in my opinion. And look at this net income. It's so crazy. It's basically 800. If you average it out here, they're making like 800 million of net income a quarter. So Mondelez, I really like this stock. I love their brands. Their brands have a lot of pricing power. Hey Nathan, do you think it's going up or down? Yo, Eric, how's it going, man? He said Circle stock. Dude, I love Circle. And I want to get in this stock right here. But I honestly think this company is going to go down tomorrow because Bitcoin is under 100,000. Bitcoin really fell over the weekend with the geopolitical stuff, with the bombing Iraq and all that, whatever. But anyway, Circle, this is the stablecoin issuer. If you've heard of USDC, Circle's the one who owns that. They basically own USDC. They issue it and all that. So, and they're profitable. This is what's so crazy. Look at this. They made 64 million just in the most recent quarter. So Circle is now a profitable company. And look at this revenue growth. You can't make this up. It's incredible. 580 million in the most recent quarter. They own USDC. I think stablecoins are going to be the future. There's like new stablecoin like cards, credit cards that are coming for Visa and MasterCard. So, and they're partnering with Walmart and Amazon. So yeah, that's interesting. Penny stock is more risky. Sid said, I invest 20% in penny stocks. Hey, 20%, that's a safe amount. Nothing extremely risky. Yo, XQCF said, Amazon, please. Yo, dude, actually, here's my portfolio right here. That's a stock I own and love. Amazon they're not even priced like Tesla is. They don't have an expensive PE ratio. I believe Amazon's going to be a huge robotics play. This is the largest robotics company in the world already. Their warehouses are already so automated, but let's go look at Amazon right here. And that's just one segment of their business. Look at their Amazon Web Services, the AWS business, the largest cloud provider. This right here is just huge. Amazon Web Services. This is the most valuable part of Amazon. For the full year 2024, it was over 100 billion of revenue. That's nuts. Look at this annual growth right here. So that's just the Amazon Web Services. Actually, here, I'll show you this right here. You guys won't believe this. I just like sharing this. Oh, is it not gonna show it? Yeah, so look, it is gonna show. Look at how diversified that they are. So 37% comes on their online store like Amazon. Then, the third-party seller services, then the Amazon Web Services. They're a huge advertising play as well. 9% of the revenue comes from advertising, then the subscription service like Amazon Prime, if you're a member, like me, the subscription revenue, and then the physical stores. They own Whole Foods, the grocery store Whole Foods, they own them. Anyway, let me stop talking about what they do. I think we all know of Amazon. This is incredible. Look at the revenue here. Revenue's up 8% year over year. Nothing crazy. I mean, still 155 billion of revenue. Incredible. It's up 8%, but look at this net income growth. It's up 64%. They're making, 15 billion a quarter. And it's just expected to grow. So the best part about Amazon is their margin expansion. They now have an 11% net margin, double-digit net margin. If we zoom out, look at that. It was really choppy. It used to be sometimes negative. So they've really turned things around here. And the penny stocks only give me huge profit. I invested in 40, 50 penny stocks. Hey, that's what's up, Sid. I'm glad that works out for you. Vanguard dividend. Are you talking about VYM? VYM stock, DLTR. Oh yeah, Dollar Tree. So hey, the dollar stores have actually been doing very good. If we go into a war, go into a recession, the dollar stores actually do good. So I think that might be why this one's really trended up. They own Family Dollar. They don't pay a dividend, but let's see, are they making net income? That's what I want to see. So they had a one-time adjustment last quarter. If you look, it said they lost 3.7 billion. That was a one-time adjustment. You really want to look at the operating profit. So they're making literally 400 million a quarter. So that's the good news. There's no chance of bankruptcy here. The cash from operations, it's down 30. I know they're doing buybacks as well. So this one, it's just a dollar store play. They're not. Are they off? Yeah, so they're a little bit off all-time highs, but yeah, they're kind of like a recession stock. Trading is gambling. WDC. Hey, did I not look at that one? My fault, Jeff Mack. I hope you're having a great day. Great Sunday, by the way. So here's Western Digital. So yeah, thanks again for being a member, Jeff Mack. He's my only member. I've only had one member ever on YouTube, and it's Jeff Mack. I appreciate you, dude. So $21 billion market cap. And look at that. The stock is pretty close to all-time highs right here. I actually don't know what this company does, and I've heard about them before. So semiconductor. So they're in Apple's ecosystem. We can kind of see they do memory chips, wafer processing, and we can actually see this right here and what stocks are in the Apple's industry chain. We can kind of see what stocks do what. But anyway, let's not get into that. Let's go look at Western Digital's business. So, whoa, they're really profitable now. Look at that growth. It's up 300%. That's incredible. Yeah, they're going to be making like over 2 billion of net income a year at this growth rate. Geez, and that's real. That is really real profits. They're deleveraging. Let's see, free cash flow. The free cash flow just exploded as well. So, what's the margins doing here? Yeah, dang, the net margin was a 22% in the most recent quarter. So that's actually great net margin expansion over there at Western Digital. Did they pay a dividend? No dividend on this company, but that's all right. Actually, it's probably good that they don't pay a dividend. They're probably doing a lot of share buybacks. Let's see if they're doing buybacks. No. Well, actually, they used to. They used to do a lot of buybacks, but not in the most recent quarter. Anyway, great that the stock's at all-time highs. I can understand why they're at all-time highs. There might even be more upside, a lot more upside with that one, with that margin growth. I mean, that's crazy. Tesla is too risky. So, yeah, I agree with that one. So Tesla just has too high of a PE. They just trade at too high of a valuation for a company that's not growing. And again, I don't want to be a Tesla bear, but I judge Tesla the same way I judge any other company. And just on every metric, no matter what, Tesla is super expensive. The only way this company's not expensive is if they really nail in the future the robotics and the robotaxi business. Because right now, look at their total vehicles delivered. Here's kind of the bad news. The total vehicles delivered are actually down 13% from the previous year. We see the deliveries by model and stuff, but we can just see that in the revenue breakdown. Look at this. 85% of Tesla's revenue comes from their automotive business. And let's see how it's doing. This is kind of why it's tough to, pay Tesla's high valuation for a company that's not growing. Look at that. The automotive revenue actually fell 15% from the previous year. So that's the bad news around Tesla. And, they traded 184 times net income. It's tough to pay that unless you're paying for so much uncertainty, future growth of robotics. And here's another bad thing. Look at this net margin. The net margin fell 70%. They just have a 2% net margin. That's the terrible news. The net income fell 70%. So they only made $400 million. They're still profitable. They're definitely not going bankrupt. I still think Tesla's a way better buy than Rivian, Lucid, all the other EV names. Actually, not BYD. I think BYD might be a better buy than Tesla. But it's just tough with these net margin collapse. 2% net margin, vehicles delivered are down 13%. Elon is getting into politics. He said he lost Trump as a friend. It's just, but he's spending more time with the company. I just think I don't know the truth about it. Everyone kind of make their own decision on it. Let's see there. What's up, Jeff Mack? Improvement said, look into Zim. Hey, that's the shipping logistics company. So this company is actually very interesting. They actually have a rule. And so if you're someone that likes dividends, this could be a very cool stock. We'll look at Broadcom after this. What's up, Jack? And so this is Zim. And like I said, 50% of the net income they make will be returned in a dividend. And look at 2022. You look on the left there, 2022, they paid you literally $27 in dividends that year. So they paid you $27 in dividends. The whole stock price is literally $16. So they returned you double your money in a dividend in 1 year. But that's when there was huge supply chain issues. There were huge supply chain logistic problems at the moment. So Zim might go up tomorrow. They benefit from all the geopolitical war fears and stuff, closing down certain shipping lanes. But look at this right here. Like I said, whenever they make net income, 50% of it will be returned to a dividend. But sometimes if you look at last year, this is when it was tough to buy Zim. They were losing a boatload of money. They didn't pay dividends these quarters because they literally didn't make net income. But with the supply chain logistics, this one is interesting. And they have a 43% dividend rate. You don't really look at the dividend yield. It says 43%. It literally changes every quarter based off how much they make. So anyway, that's an interesting dividend growth company. I'll benefit from that. So here's Broadcom. Dude, I love Broadcom. They're coming for NVIDIA. They're eating NVIDIA's lunch. The stock is at an all-time high, literally all-time high. Congrats if you own this one. And they deserve it. They're not even that overvalued either. If you buy this stock right now, you still get a near 1% dividend. Well, look at this free cash flow growth. You won't believe it. So a lot of people know Broadcom for the semiconductor solutions because that's half the revenue. But the hidden gem on Broadcom is right here. This infrastructure software, and you're not going to believe the growth. I mean, look at this. It used to be 1.9 billion. Well, in the most recent quarter, it was 6.6 billion. Incredible growth of the infrastructure software. So the growth is why this stock's at an all-time high. Companies that are growing their fundamentals usually grow in stock price. And look at the FCF. FCF stands for free cash flow. It's up 44%. They made 6.4 billion in free cash flow. And let's see, are they returning money to shareholders? So they're reinvesting in the business. Yeah, geez, they're returning $5 billion a quarter to the shareholder. So, and you get a dividend, 1% yield. Broadcom, great company. I honestly, I'm sad I don't own them. Let's see, MAR stock. Then we'll look at Robinhood, and we'll look at Costco. So here's Marriott International. And then we'll look at some of these other stocks here. I haven't even been looking at the TikTok. Yeah, we'll look at MO, Hershey's, Innodata. I want to get to all these. But here's Marriott. This is like the hotel, I believe. I actually haven't looked at them, but this is Marriott International Hotel. Let's see how they're doing on an annual basis. They don't have much history. Do they pay a dividend? So yeah, they do have a dividend. You get 1% of your money back in a dividend with this company. Let's see here. So I know they're in the hotel business, obviously. And yeah, look at that net income. I believe this is a royalty play as well. Marriott gets a lot of high margin royalties from people who are using the Marriott name. And look at that. They're literally making over $2 billion a year. They're making over $2 billion in net income a year. I mean, that's incredible. I could see how much their dividend cost. I'll be quick about this. So they're making $2 billion a year. I think it should show me in here. And the dividend, they're spending so much on buybacks. They're spending like $1 billion on buybacks a quarter. The dividend only cost $175 million. So the dividend payout ratio is so low. Anyway, Marriott's actually a very interesting stock right there. They're kind of like a Hilton. Hilton is a great one as well. So XQC said Robinhood stock. Yeah, hey, if we go back to over here, I do own that one. That's actually my best performing stock in terms of total percent change. I can't believe this. We're up, it's like a call option. We're up 456%. We took a lot of profits on this company as well. And well, here's the thing. I bought this stock years ago. So as you can see, here's where the stock is right now. It's at $78. Let me show you where I bought this stock right here. So this is why there we go. It's great to buy and hold. So literally when this company IPO'd, here's where I bought the stock. Check this out. Here's where my buy orders. I was buying this stock in 2021. That's when I bought Robinhood in 2021. All you had to do was wait a couple years and we're finally green. But anyway, the fundamentals are so great here. I mean, Robinhood mainly just follows Bitcoin. They make so much from crypto transaction fees. And look at the revenue. It's up 50% from the previous year to an all-time high. So great revenue growth there. And also net income growth. They're extremely profitable. They're making hundreds of millions in net income a quarter. That's great news for Robinhood. They're extremely profitable. So they're great. Costco. Hey, yeah, let's look at Costco. You know, this is a great grocery store. And especially right now, you know, consumers love getting good deals. When Costco, you buy stuff in bulk there. So like you buy, you know, a bunch of stuff in bulk and it's a way better deal, you know, buying the stuff individually. And that's why I think a lot of consumers love Costco. And also you have to have a subscription to get into Costco. So it's just a great business model. You know, they get the subscription revenue. Even if people don't come to the store, they're still paying for the subscription. And anyway, they're making a boatload of net income, nearly $2 billion of net income a quarter. Costco's crushing it. The only thing is, yeah, the valuation's a little high on this company, but the business is just so well run. The net income, I just couldn't see it going down. I mean, the future of Costco is only up, I feel like. But yeah, it's tough to buy this one. What's the PE? Yeah, the PE is a 55 and the industry average is a 39. So they're trading at a premium to the market, but they deserve it. Because Costco, great business model. But somehow it's still growing, yeah. I'm 23. I barely started investing. Yo, XCC, that's great, dude. 23 is way younger than a lot of people started to invest. Hey, I appreciate you, XQ. Hope you're having a great Sunday. Let's see. IBM has a nice run. Oh, yeah, then we got to look at MO and CAT. Oh, yeah, CAT. I want to look at Caterpillar. So anyway, here's IBM. Yeah, dude, IBM has been crushing it. You know, they really turned the business around. They used to trade like an HP, a Logitech, a Dell, just a very low valuation because the business wasn't really growing, but IBM is now finally growing again. And if you buy the stock right now at all-time highs, you still get a great yield, a 2.4% dividend yield. They're in quantum, they're in software, they're in consulting, infrastructure, financing. So they're a very diversified portfolio of revenue streams. They're in quantum computing. And basically, they're expanding their business margin. They're expanding their margins right here. Like they're making pretty much $2-3 billion of net income a quarter, which is the good news. They had a little one-time adjustment on the net income. But anyway, IBM, great dividend growth company. It's just tough to buy this one at all-time highs. It's tough, but the growth is back. Actually, if we go back over here to the quantum watch list, I think they're one of the main holdings in here. So if we go to the quantum computing watch list, yeah, IBM is the second largest holding in here. You know, Google, you know, they're going to be the industry leader. They have the money and the talent. So does IBM. They have the money and the talent to be the industry leader for quantum computing. Sorry. I'm drinking I got some ginger turmeric tea. It's actually really good. So ticker symbol BULL. So yeah, this is Webull right here. Oops. So Webull, they just IPO'd just a couple weeks ago. Look at that. The stock IPO'd at like $15, and then they rallied all the way up to 80. And now the stock is literally just bull flagged or bear flagged all the way back down to $10. It's really weird. And Webull is literally this app right here. I'm a customer. I've probably made them so much in transaction fees. Well, probably not that much because my account isn't too big. But anyway, I do have a Webull account. So this stock right here, BULL, is literally just this app, this brokerage publicly traded. So let's go see how they're doing actually. They're kind of like a Robinhood. That's where I think Webull will eventually trade like a Robinhood one day. I don't know if Webull's into crypto. Yeah, you can't buy crypto on Webull actually. Or maybe you can. They took it away. Anyway, I've used Webull since 2021, so I know how it works, right? But anyway, this revenue growth is great. The revenue grew 31% from the previous year, and they're making net income. So great news for Webull. And the two most recent quarters, they're actually making net income, over $10 million a quarter. Great news. So, but the thing is, there's not too much history. But I think this one is probably undervalued. They're only a 4.9. They're only a $4.9 billion company. That feels like such a small market cap. But again, they're only making like $50 million a year. but it should just improve from here. Anyway, I like the brokerage on that one. I think a lot of people like the Moomoo or the Webull app, and hey, I use it. So let's see. Oh yeah, MO right here. So if you like a high yielding dividend play, this is Mo Ultra Group. They're a sin stock. They just sell cigarettes. They have some exposure to some weed stocks. But anyway, Ultra Group, check this out. They're one of the few stocks that have a sustainable, really high yield. So this company has a 6.76% dividend yield, and the payout ratio is only a 61%, and that's real. So they actually have a sustainable dividend payout ratio. And again, they just sell, if we go to the revenue breakdown right here, they just sell basically, they own Juul and a lot of cigarette companies. Anyway, so that's why they trade at a low valuation, because they're in that industry. They just sell a commodity, like literally just cigarettes. So yeah. Anyway, there we go. Sorry, my phone disconnected there. Didn't even realize it. So yeah, there we go. 87% of the revenue comes from their smokable products. So yeah, that one is a high dividend play. USO, check it out. Is that United States Oil? So yeah, this is ticker symbol USO. I think this company gives you a K1 tax form. So be careful, because if you buy this one, they send you a K1 tax form, and it's like notoriously hard to fill out. My first year investing, I accidentally bought an MLP, literally like $10 or $20 of a stock I bought. They sent me a K1 tax form, and it costed me like $200 with an accountant to get it filled out. So anyway, be careful with that, because this is an LP, a limited or master limited partnership. So I wouldn't buy this one for tax purposes, but this is like an oil and gas. Oh, so this is an ETF. Wait, so they just own, basic oil futures. Okay, so it probably just follows whatever oil does. I'd probably, if I just wanted exposure to oil, I'd probably just buy like a Chevron, an Exxon. This is one of Warren Buffett's top oil stocks, or his largest oil stock. And if we look at this one, you get a great yield on this one as well. You just buy Chevron, they own some gas stations. You get a 4.4% dividend, qualified dividend. That's what's so great about oil stocks. Whenever there's geopolitical issues, like right now, there's a lot of geopolitical fears. Let's see, where is Chevron? I had them on the watch list. Yeah, look at ExxonMobil. This is ExxonMobil, but it would probably be the same for Chevron. They're up 4% in the overnight market because of the wars right now. So oil stocks do good whenever there's war fears, inflation fears. Oil does good, and you get a great dividend with oil stocks. So yeah, that's Chevron. Let's see. How do you like capitalism? Hey, it's great. G is better than the alternative. GRRR, Gorilla Technologies. And how's it going, GRAD? And we'll look at Salesforce as well. We'll check them out. I love Salesforce. So here's Gorilla Technology. I don't think I've heard of this one, but look at that huge gap up. They reported earnings and they're up 34%. That's a huge rally. Let's see if we can figure out why. Is this right? So this isn't looking great. There was 18 million of revenue. The balance sheet looks great. You know what? Let me go to the news tab. There's not much history behind this company. I wish I could give you more thoughts on this one. I can't really see anything that's really blowing me away here, but the stock is up 34%, in the most recent day. There must be some good news there. I think this one's like a huge momentum play. The net income's a little choppy. Like the last quarter was 2024 Q2. Like they didn't report earnings for a couple quarters. It's weird. So I just can't see the earnings there. So I apologize. If you got another stock you want to look at, let me know. So yeah, here's Salesforce stock. I love Salesforce, great CRM company, great software stock. They have incredible margins now. If we look at this stock right here, look at this. I love the diversification. Look at this. 23% of the revenue comes from service, then sales, platform. They own Slack. If anyone heard of Slack before, Amazon uses Slack for all their employees. But look at this. We'll just go one by one here. Look at the services business. Let's go to annual. It's really at a record. So the services revenue is at a record for the full year 2024. The sales business, literally record as well. It's a new record every year. Platform and other at a record. Integration and analytics at a record. So everything's growing at Salesforce, which I love. 61% of the revenue comes from the US, and then Europe, Asia. So let's look at the FCF, which is free cash flow. This is ridiculous. In the most recent quarter, they made $6.3 billion of free cash flow just in one quarter. And they're a shareholder-friendly company. They're doing a lot of buybacks. They bought back like $2.5 billion of their stock. the most recent quarter. So, and they just started paying a dividend. You get a 0.6% dividend yield here. So anyway, I really like Salesforce. And I forgot to look at just the net income right here. Look at the net income. They're making well over $1 billion of net income every single quarter. So Salesforce, I think, is going to be a winner in the long run. Yo, what up, Vinit? How's it going, man? He said AMBA stock. Let's check it out. So this is Ambarella. I actually haven't heard of this company before, but let's check him out. I'm actually intrigued. So they're a $2.2 billion company. So they don't have that big of a market cap. $2.2 billion company. And the stock's kind of been flat. Look at that. The stock has been flat since 2019. So let's see if we can figure out why that is. I just like looking at the fundamentals here. Development and sales of low power artificial intelligence based processing and video imaging. Geez, okay. Well, anyway, this is great news because the revenue is up 57% from the previous year. So they have seen actually a lot of growth. So that's great news. Where does the revenue come from? Oh, so look at this. Barely any other revenue comes from the US. So this is a Taiwan stock. And they're in Asia. So yeah, 63% of the revenue comes from Taiwan. Let's see the net income. So they are still losing net income every quarter, like 20 million, but the trend is getting better. The trend's getting better and the sales are doing great. Look at that. The sales are up 57%. So, and they have no debt. That's a super great balance sheet. How much cash do they have? 260 million of cash, no debt. What's the market cap again? So actually, I'm going to add this one to the watch list. I know they're Taiwan based, so that's probably why they have a low valuation, but over 10% of the market cap is just their cash on hand with no debt. And what was the net income again? So they're still losing net income every quarter, but it's getting very close to profitability. So that one's actually interesting. If they get profitable, that one could, XQC, please upload more videos. Hey, I'm going to upload a video tomorrow. I appreciate you, homie. Off the top of your head, if you had to choose between Cisco, Oracle, or IBM, oh, that's such a hard decision. Those are all cool companies. You know, Oracle's at all-time highs right now. This is a huge cloud play. If anyone's heard of the Oracle Cloud, they just reported some really good earnings. And look at that. The stock is pretty close to an all-time high. And you get a yield on Oracle. I'd probably pick IBM or Cisco just because Oracle's at all-time highs. But this is still a great company. I mean, the revenue beat like crazy, actually. Net income, EBITDA. So yeah, look at this net income on Oracle. I mean, no chance of going bankrupt here. I mean, they're literally making over $3 billion of net income every quarter, and it's just expected to keep on growing in the future. So actually, Oracle, I really like this one as well. And you get the 1% dividend on that company. They're really interesting. But let me look at CSCO again. So, or Cisco, yeah. So this is a software company. You know, this was huge in look in the year 2000, the dot-com bubble. It's the same price that it was back then. It's finally recovered. Look at that. It's pretty close to an all-time high. So all you had to do is not sell, and you'd be at all-time highs on this company. What's the dividend yield? So look at that. If you buy this stock at all-time highs, 2.4% dividend yield. So that's actually a very strong yield. Fair valuation, 27 times PE. They're in networking, services, security. How's the security revenue doing? Hey, wow, actually, look at that growth. Security revenue is up 55% from the previous year. I mean, look at that. I mean, this is just one segment of their business, but look at that. It's at a record, the security business on Cisco. Maybe they're getting into cybersecurity. That's really interesting. I mean, they're extremely profitable. I mean, they're making $2-3 billion of net income every quarter. So, yeah, I really like that. What platform are you using? Oh, hold on there. Yeah, hey, if you want to get the software that I'm using, I think you could go to that link tree right there, the very first link in the link tree right there. You can get this software I'm on right here. It's called Moomoo. It's a brokerage. I love this app right here for the analysis. I mean, there's so many cool features. I mean, we could see the Morningstar research. Like, let's check out the Morningstar research right here. What they have is like you can read what the bulls say and the bears say. So right here, you know, the bulls say, I mean, I don't want to read all this, but here's what the bears say about Cisco. There's just so much research that you can learn about this company. If you just want to analyze a company, I recommend this app that I'm on right here. Yeah, if you want to get it, it's in that link tree right there, the very first link there. And if you deposit $100, we'll both get some free stocks. It's an affiliate link, so it helped me out. Anyway, I just recommend this brokerage because I use it so much. Lockheed Martin doesn't have public support. I don't know. Look at the comments of this. Hey, I didn't know that. That's interesting. So let's keep going here. Oh, PayPal stock. Yo, PayPal. I haven't looked at them in a while. On TikTok, if the way TikTok pays you, the only way to get paid on TikTok is through PayPal. So it's like their only provider to get paid. So anyway, they take so dang. I've probably given PayPal hundreds of like just high margin transaction revenue. It annoys me. But anyway, look at this net income they're making. I mean, it's great over here at PayPal. They're making like easily over $1 billion of net income every quarter. The net income's growing. I think the reason, like if you look at the stock right here, on the weekly. The reason the stock really hasn't moved, I don't know. It might be the slowing revenue growth. Like if we look at the revenue, the lifeblood of the company, here's the truth. The revenue on PayPal is only up 1.2% year over year. So that's not really any growth. The revenue's up 1%, but the net income grew 44%. So that means they are growing their net margin. 16% net margin is actually very good. But the valuation is so low on PayPal, I think this one might be a good deal. Yeah, look at that. The PE is a 15. That's like they're trading at a commodity multiple where they're like expected to not really make you or lose you any shareholder value. Yeah, I think PayPal's undervalued. Yeah, nah, financial advice here. I don't own them. But anyway, Cisco integrates security with its networking. Oh, hey, that's cool. Too much competition for PayPal. Yeah, they just do a commodity. Yeah, I agree. Roblox. You know what? Let's go to Kathy Wood's portfolios. I never heard of the Kathy Wood. She used to be huge until her portfolio just tanked. But yeah, Kathy Wood, 7.3% of her portfolio. Her third largest holding is in Roblox. And check that out. The stock's done incredible. And I mean incredible the past couple months here. I mean, look at that. They've like just go up every single day slowly. So here's the good news about Roblox. Let's check them out. So active users. So Roblox has 97 million daily active users and it's up 15%. So that's good growth of their daily active users. And look at this as well. Look at the FCF, which stands for free cash flow. Free cash flow is up 120% to 400 million. That's a record free cash flow quarter. So they just made a record amount of free cash flow. But here's the only bad news about Roblox is their stock-based comp. So look at that. They're making a bunch of free cash flow. But if you go to the net income, they're actually losing 200 million of net income a quarter. Why are they losing all that net income? It's because of their stock-based comp. They're paying their employees so much in stock, but they're still growing phenomenally. Like the free cash flow is growing like crazy. The revenue's up 30%. I remember this used to be a huge metaverse play, but I really want to see this company get close to profitability because right now they're still losing over 200 million a quarter, but the trend is getting better. They lost 20% less money than the last year. So I like that trend. I mean, honestly, probably the reason the stock is going up so much is because analysts probably thought this company had a real chance of bankruptcy. They're probably not going to go bankrupt anymore. But yeah, here's Kathy Wood's portfolio. She owns, actually, I forgot to look at Shopify. Someone said that in the chat earlier. You know what? Let me go to Shopify really quickly. They're a Canadian company, actually, but dude, Shopify has one of the best growth rates I've ever seen for a company. Look at this right here. If we just look at their total revenue, I mean, basic metric, just their total revenue. Look at this for the full year 2018, it was $1 billion. And now for the full year 2024, it was $8.8 billion. I mean, look at that. The revenue just hits a new record every single year. I used to have a Shopify store. If you'd sell anything on Shopify, they would instantly take a 2.5% transaction fee. And it'd all be super high margin for them. Yeah, look at this free cash flow they're making. But dang, it was 600 million last quarter. So yeah, Shopify is a really cool one. And they're now getting net income positive. So yeah, Shopify, really cool. Senator portfolio, Trump portfolio. Oh, are you talking about this right here? Yeah. These are all the super investors right here. Oh yeah, here's the oil stocks that should do good in this escalation. Yeah, Shell, BP, GLD. GLD is the gold ETF. So this is literally the commodity of gold in an ETF. So I prefer to buy GLD than physical gold because there's less transaction fees. Like you go to sell your physical gold at a pawn shop or anywhere, you have to pay like a 0.5% fee or sometimes even more. But with GLD, you can just instantly sell it whenever you want. Anyway, I mean, that's just gold though. And there's some oil stocks as well. ExxonMobil, Chevron, those are some higher yielding plays. But yeah, these are super investors right here. So like Warren Buffett, Kathy Wood, these are super investors. People with over 100 million, like Nancy Pelosi, they have over $100 million net worth. So literally by law, by SEC law, they have to report all their holdings publicly. And we can see Nancy Pelosi, her largest holding is Apple, then Amazon. We can see her most recent trades. These are literally her most recent trades. They have to do a quarterly. So in January, she was buying NVIDIA options, Google, Vistra, Tempest AI, all these stars are here. Anyway, let's keep going. Oh, Progressive, dude. This is a great dividend growth stock. So this is Progressive right here. This is the insurance company, and they have been crushing it. This insurance stock, like, Flo, the insurance commercial Progressive girl, the stock's at an not all-time high, but they've done great. And even if you buy the stock right now, the valuation isn't nuts. If we look at the PE ratio, the PE is a 15. They're trading at 50, or no, sorry, it's the left of that. The PE is a 17, and the industry average is a 15. So they do trade at a just very, very slight premium to the industry, but they deserve it. I mean, they're printing money. Look at that, over $2 billion of net income every single quarter if you average it out. And it's growing. It's up 10% from the previous year. The free cash flow was like, no way. They made $5 billion of free cash flow in the most recent quarter. How much is the whole company worth? $150 billion. That's crazy. They're making $20 billion of free cash flow a year. Personal lines, commercial lines, investment income. How's their commercial lines doing? Yeah, just look at this growth. It's at a record. The personal lines, yeah, at a record as well. So everything about Progressive, it's an insurance stock. The insurance companies just make so much money. And you get a nice dividend, a 1.87% dividend yield. They do special dividends. So Progressive, they're a great dividend growth company. Just buy and hold for the long run. Devish said let's see if we can find this one. FCNCA. I hope I can find this stock. Okay, we can find it. So First Citizen Bank shares. So check it out. They've actually had some incredible stock price appreciation since 2019. I mean, this was a $500 stock. Now it's $1,800. So for a bank, they've been crushing it. They've been growing their dividend every year. Very good dividend growth. So yeah, look at that. General Banking, Silicon Valley Bank. Oh, they bought Silicon Valley Bank after they went bankrupt, I'm guessing. Commercial bank. So they're just a bank. Let's see, net income. Yeah, they're making a lot of net income, basically $700 million a quarter. It did fall 30% year over year. Yeah, the revenue fell 6% year over year, but it's no big deal. I mean, they're still printing net income right here. With the dividend, look at the payout ratio. They just have a 3% payout ratio for a 0.3% yield. That's a very good payout ratio. Like, they could triple their dividend and easily afford it. I'm going to add them to the watch list. They've had some nice stock price appreciation. They probably got a steal buying Silicon Valley Bank. That might be why the stock went up so much. So let's see here. Hershey's, yo. Yeah, so Hershey's, this is the company that owns Kit Kat. You heard of Kit Kat? Reese's, Skinny Pop, popcorn. So they own a lot of, snacks and chocolates. Let's see if we can find that right here. So yeah, North America division. This company's been really hurt right now because of the price of chocolate. The commodity price of cocoa and chocolate has been to the moon, which sucks for them and their input costs, but they're still making a boatload of money every quarter. They're still profitable, making hundreds of millions in net income every quarter. Last quarter, it was $800 million. So great quarter last quarter, and the nice yield here. If you buy this stock, Hershey's, you get a 3.2% dividend. So they're kind of like a Mondelez, a General Mills. General Mills is another great stock I actually want to look at real quick. GIS right here, General Mills. If anyone's heard this company, they own Cinnamon Toast Crunch, a lot of cereals, Frosted Flakes. But look at this stock. They've really been suppressed recently. And I think right now, again, not financial advice, is a great time to check out General Mills stock. Check out the dividend. You get a 4.5% dividend, and the payout ratio is only at 55%. So they can actually raise the dividend. The dividend's very sustainable. And look at this. Here's where their revenue comes from. They're in snacks. They're in cereal. Like I said, Cinnamon Toast Crunch, Frosted Flakes, convenient meals. They're in pet. I like that industry, pet. They sell dough. They own Pillsbury dough, baking mixes, yogurt, super premium ice cream. How's that doing? Anyway, I just love the diversified revenue streams, and they're making a lot of net income as well. But actually, it looks better than Hershey's. They're making $800 million a quarter, and you get the 4.5% dividend. So General Mills, I actually really like that one. About to take a COSC test. Wish me luck. Oh, Improvement. Good luck with that one, man. Hope you turn to $1 million. Improvement. Hope you have a great Sunday, man. I appreciate you being here. Callie, what's up? Callie Wood said ARLP. Let's check this one out. So this one's on my watch list. I don't know why. I don't remember this company, but they're on my watch list. So there must be something I like about this stock. Let's check them out. So, whoa, look at that dividend. First of all, huge dividend. You get a 10 or near 11% dividend yield. The dividend costs $2.80. So yeah, this is a coal company. Okay, so look at that. Illinois is based in coal operations, Appalachian coal operations, oil and gas royalties. So they're getting some royalties. How's that doing? Hey, this is all high margin for them, the royalties. So coal royalties, how's that doing? Anyway, it's very interesting. So yeah, they just, I guess, trade with a commodity of coal. And they're still making net income every quarter. This is good news. But the net income is falling. Like that might be why the stock has kind of been flat for a while. It actually hasn't. I would honestly expect ARLP to go down more, but this is great news right here. They're making net income every quarter, even though the net income did fall 50% from the previous year. Very good balance sheet. I know Trump was actually saying good news about coal. Actually, he said something that he likes nuclear energy and he doesn't mind coal. He likes coal. So yeah, the 10% dividend, that's an interesting one. They're definitely not at all-time highs. They're kind of reliant of the commodity of coal to go up, but still, that's very interesting. Coal and Bitcoin mining. Oh, so that company mines Bitcoin. That's actually really cool. So here's Mercado Libra or something. I don't know. Libra. This, I believe, is like an Amazon competitor. They do exactly what Amazon does, but in other countries. Let's see, where does the revenue come from? So yeah, look at that. Oh, so yeah, look at that. 55% of the revenue comes from Brazil, then Mexico, then Argentina. Wow, Argentina, 3 billion, 4 billion of revenue from them. Anyway, so yeah, commerce revenues, that's from like their Amazon competitor business. And then they're in fintech as well. Look at that. I like how diversified that they are, 50-50 split. How's their financial services revenues doing? Whoa, look at that growth. It's actually done really good. So let's go look. Are they profitable? Yeah, easily. They're making $500 million of net income every single quarter. So yeah, they're doing great. Did they pay a dividend? No dividend, but that's okay. Amazon doesn't pay a dividend either. So that's actually a very interesting stock right there. So let's see right here. Oh, here's another great company. CAT. This is Caterpillar. They have those heavy machinery like excavation tractors and stuff like that. They make those huge machinery, and this stock has done great. They're close to all-time highs. And look at this right here. The valuation is pretty fair. They literally trade at a 17 PE. So they're trading at 17 times net income. That seems like a very fair valuation. And look at this. They're in energy and transportation. They're in construction industries. This actually hasn't seen too much good growth. The construction business is down 19%. Really, our resource industry. So anyway, they're very diversified. Yeah, resource industry. Let's see the net income. So yeah, look at this net income right here. Here's what's so impressive about Caterpillar. They're making over $2 billion of net income every quarter. So extremely profitable, 1.5% dividend yield, only a 25% payout ratio. They raise their dividend every year. They're an American manufacturer as well, so they should benefit from like the tariffs and stuff. I don't know. Yeah, inside United States, 50% of the revenue. But yeah, Caterpillar, I really like them. And what was the valuation, the PE on this company? Yeah, look at that. The PE is a 17. Which is historically fair. Morningstar has it at a $422 stock price. Let's see what Morningstar says. They have a wide moat. That's great. I'm actually curious to read this later. Here's what the bulls say. Here's what the bears say. Updated on April 30th. So anyway, Caterpillar is a very cool stock. How did you get interested in investing? I was like, I basically stopped. I lost my job basically, and I'm like, dang, what am I going to do? So I just started investing in the stock market, and I love stocks, dividend growth companies. One day I just want to have my income from my stocks replace my, job income. And check this out. Every stock in here actually pays a dividend. Meta, Google, these are dividend paying stocks, very low yields, but McDonald's, that's a heavy hitter. And if I go to my Roth IRA right here, we also have a Roth IRA. I have some monthly paying dividend stocks like Main Street Capital right here. I got 10 shares of them. They pay a monthly dividend. Oh, look at that. We have a pending dividend. They're already paying me again. We're getting $3 from this company. We get $3 every single month from Main Street Capital. So again, I only have a $500 position, but $3, that's not bad. tax, it's in my Roth IRA, so that $3 dividend income is tax free. So let's see. Yeah, hey, sorry, there is a little bit of lag right now. Um, YouTube is telling me we're not receiving enough and it's buffering. Okay, that's not good. Yeah, so hey, yeah, I'm not at a hotel. This is unfortunately, Mac, just my normal terrible Wi-Fi. I do apologize for the lag here. Oh, it's back to green. Okay, we're back to green. I don't know what's happening, but let's keep going here. So ULTA, this is Ulta Beauty. So this is one of the beauty and cosmetic stocks. Warren Buffett actually owned this company for a small amount of time. He bought it and then sold it the next quarter, which was weird. But yeah, if we go to where the revenue comes from, look at this. 41% of the revenue comes from cosmetics. Then they're in skincare. Then they're in hair care. So fragrances like perfumes. These are high margin industries. So that's what I really like about Ulta. And look at this. So despite this like stock price going down, I mean, it's because the net income is going down, but still they're making so much money, over 300 million of net income a quarter. So yeah, it's down 2.5% year over year, but it's still an incredible amount. The fact that the net income is down is probably why the stock has been flat for a year, but I can see past that. They're incredibly profitable. I love the industry, hair care, skin care, fragrances. These are high margin businesses, and they might even pay a dividend one day. I know they're doing crazy stock buybacks. They're buying back like 5% of the company a year. So, Leroy said MOAT. So this is an ETF actually. So this is the Van Eck Morningstar Wide Moat ETF. Oh, we were just looking. Oh, it was Caterpillar. Caterpillar had a wide moat on their business. So let's see. Here are all the high or good moat companies. They got Disney on here, Estate Lauder, Viva Systems. I've never heard of this company, Cortiva, but the stock's at an all-time high. Actually, I wanted to look at Estate Lauder. Has anyone heard of Michael Burry? Michael Burry, he's famous from the 2008, The Big Short. He was the guy that shorted the market in 2008 and made like a boatload of money. That guy, Michael Burry, owns nothing right now. He just sold, and he's a super investor, so he has to disclose it to the SEC. And we just looked at this. Michael Burry, the only stock he owns, the only stock Michael Burry owns is this stock right here, Estate Lauder. He bought the dip on this company right here. And this is another beauty and cosmetics company. We were just looking at Ulta Beauty. Estate Lauder, they do the exact same thing. Look at this. So they're in skincare, makeup, fragrance. So these are all high margin industries that I love. So Estate Lauder, they're doing great. And look at this. They're only 25% of the revenue actually comes from the US. So anyway, yeah, these probably aren't too attractive stocks to a lot of people, because you'll never buy any of their products. But yeah, let's keep going here. Monster Beverage. Yeah, so Monster Beverage right here. So this, if you heard of the Monster cans, you see their energy drinks at the gas station. This company has had some monster stock price appreciation, and that's because they just buy back their own stock. Here's a fun story. You'll like this, and you probably don't remember this brand, but on TikTok, there used to be this brand called Bang Energy. Bang Energy used the word super creatine on their cans. Monster Beverage sued them for $400 million, and they went bankrupt. And then Monster Beverage bought out the whole company of Bang Energy after they went bankrupt. I mean, it was genius. Anyway, they're printing money, like $400 million of net income a quarter. A lot of people love buying Monster Beverages at the gas station, and I like that company. And the largest shareholder, you guys won't believe this, is Coca-Cola. If we go to Monster Beverage, their largest shareholder, look at that, 21% of the revenue is actually Coca-Cola. So if you own Coca-Cola stock, you technically own a little bit of Monster Beverage. And check this out, right here, I own ticker symbol COKE, Coca-Cola Consolidated. This company right here, Coca-Cola Consolidated, actually bottles for Monster. So this company right here bottles the Monster beverages in the cans. They also bottle for Dr. Pepper, which is very interesting. That's my most recent purchase. You can see where I've been buying the dip on this company. I'm down 3%, not much, but look at that. You can kind of see where I've been buying the dip. I just like being completely transparent. How much is your total investment portfolio, and where do you invest other than this? Yeah, hey Sid, if you go to my channel, I just made a video called literally every stock that I own, or it's probably like a couple weeks old, but you could see every single stock that I own and why I own them. My total portfolio is worth about 50,000. I'll just show you transparently. Look at our total profit here. We're only up 4% all time in here. We've definitely underperformed the market. Don't trust me. Don't listen to me. I'm not an expert. By the way, I appreciate y'all being here. I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I don't got none of that. I'm literally just on here giving my opinion. The only way to support me is to just hit the subscribe button. I'd appreciate that. But yeah. This one's worth 15,000. Then we have our Moomoo account. This one's worth 16,000. Actually, here's the all-time. We've actually done very good in this portfolio. All-time, we're up 53% all-time in here. And if we go to year-to-date, since January 1st, we're up 15%. So anyway, in this portfolio, once I buy a stock in here, I try and never sell it. I just try and buy it. When I buy a stock in here, I just never sell it. And then we also have our dividend growth portfolio in Robinhood. So yeah, basically, we just own a lot of dividend growth stocks in here. And all these companies are also in the S&P 500. McDonald's, Meta, Google, Constellation Energy. And yeah, this one's worth $23,000. And then we have the Roth IRA, which is worth $1,000. Anyway, if you go to my YouTube channel, you can see I just made a video. If you go back a couple videos, it's all 40 stocks that I own. I reveal every stock that I own. So yeah. DPZ, is that Domino's Pizza? Has anyone heard of like the pizza indicator where like the Pentagon has been ordering a bunch of pizzas recently? They have like a Domino's pizza in the Pentagon for when they discuss what they're going to do in war. And they've been ordering a bunch of Domino's pizzas because they've been war planning. It's called the pizza indicator or something like that. Anyway, it doesn't matter. The Domino's pizza, you can feed a family, for a relatively cheap price. A lot of people in a recession, Domino's Pizza actually does good, and you get a dividend, a 1.4% dividend yield, and they raise their dividend every year. For 2024, they paid $6 in dividends. Look at the previous years. 2023 was only $4.80, and then it was $3.70. So they're raising their dividend like crazy. They can easily afford it. They're a supply chain, and look at the net income right here. Domino's Pizza is making $150 million plus in net income every single quarter. So Domino's Pizza looks like a really cool dividend growth company. And it's kind of recession resistant. If we go into a big recession, Domino's Pizza shouldn't fall that much, compared to like some other tech companies. So yeah. They have the printer to print money. Wait, forget what I was talking about. Speaking of Dr. Pepper, thoughts on KDP? Yeah, dude, Keurig Dr. Pepper. So if we have a Keurig coffee machine. As you have to buy those little pods. They're called like K-pods. The Keurig, they own the patent for those little pods. So anyway, I love Dr. Pepper as well. I love like the spiciness of Dr. Pepper. And they own the little, look at this, K-cup pods. This is what I was talking about. They own the patent for this. This is reoccurring revenue for them. We buy so much of their freaking K-pods. It's crazy. Anyway, if you look at last quarter, you see how it says they lost $140 million. That was a one-time adjustment. They actually just bought Ghost. Has anyone heard of Ghost before? It's like an energy drink company. Anyway, point being, that's why their net income was negative. It wasn't actually negative. We can see that on their operating profit. This company is literally making like $700 million of net income, or basically $500 million of net income a quarter after tax. So I really love Keurig Dr. Pepper. I love Dr. Pepper. I love their little coffee machine, the K-pods. I love the patents they have for that. And the dividend. You buy the stock right here, you get a 2.8% dividend with Keurig Dr. Pepper. So anyway, the Keurig is such a big part of their business that the name is literally Keurig Dr. Pepper. They combine the names there. So yeah, they're a cool company. What's up, Nathan? Is Robinhood still ongoing after the Franco, what's up, dude? So Robinhood, that was before they were publicly traded. Robinhood was not mature back then. Robinhood was a bit irresponsible, but that whole where they took off the sell button for GameStop, that was before they were public. I'm gonna hope now that this is a publicly traded stock. They have investors, they have all this stuff. They're gonna always do the responsible thing now, and the market believes that as well. Sid said, hey, what app is this? Hey, if you go to that link tree the link tree right there, it's the very first link there if you want to get the software that I'm on. Anyway, Robinhood, if we look at this right here, look at the revenue growth. I mean, this is the financials of it. The revenue's doing great. The revenue's up 50% from the previous year to a new record. And the net income, they're making hundreds of millions in net income every quarter. When if we zoom out, this company used to lose hundreds of millions in net income a quarter. So people are really taking Robinhood serious. They're about to get added into the S&P 500. But the thing is, you can't really buy this one right now. This one is at all-time highs. The risk reward does not look good on this company. And Robinhood mainly trades with Bitcoin. Whenever Bitcoin goes up, up, Robinhood goes up as well. And hey, here's the overnight market. Yeah, they're down 1% in the overnight market. SoFi's down 2, Super Micro's down 2. Dang. Yeah, the market's not going to be too happy on Monday. Dang, Dave is down 4. Yikes. That'll be interesting. Are you invested in Apple? I'm actually not invested in Apple, but I own Google. I own Meta. Dude, Meta, I love Meta. They just acquired half of Scale AI. And he said any renewable energy stock. So this is the largest nuclear energy stock. So this is ticker symbol CEG, Constellation Energy. They own, out of all publicly traded stocks, this is the largest pure nuclear energy play. They literally own 50% of all the USA nuclear energy reactors. Trump is super bullish on nuclear reactors, and this stock has been reacting accordingly. They're up 40% in the past 3 months, and check this out. It's tough to buy them right now, I get that, but we're up 46%. It's been one of our best performers, and we literally bought this stock like we were just red. Literally in April, we were down 20%. Look at this. Let's go to year to date. Look at this stock year to date. They were down 25% in April. They were at 170. Now they're at 303. Anyway, they've really recovered. But this is one I'd add to your watch list. CEG, largest nuclear energy stock. And I love you can't really make any new nuclear energy reactors, like those huge silos. Yo, ticker symbol POOL. So Warren Buffett just bought this stock right here. This company has a monopoly on the pool supplies equipment industry. So pool, let's see how they're doing. So unfortunately, the stock hasn't done too good. Like they're at like a new 52-week low. Just the past couple, like 2 years, they've kind of been flat. Let's see if we can find out why. This is why I like looking at the financials. Let's see if we can figure out why they're down. So yeah, this is probably why. Look at this. Look at that. They're down, or the revenue is down 5% from the previous year. So they kind of just lost their growth. So yeah, revenue's down 5. And yeah, look at this net income. So it's kind of the good news is they're still making a lot of net income every quarter. They're not even close to going bankrupt, but the net income is down 32% from the previous year, and the revenue is down 5%. So what that means is they're really losing their net margin. Look at that. Margins fell 30% to just a 5% net margin. So we want to see the margins come back. But I like the dividend on this company. You get a 1.7% dividend. I forget because all your local like pool supply, like if you have someone come and look at your pool, almost certainly they're ordering all their parts from pool.com, from pool right there. Are you not into intraday trading? Not really. I mainly just buy and hold stocks. Like all these stocks right here, like Amazon, if I click on any of these companies right here, I don't sell them. I just buy and hold these for the long run. Like Powell Industries, I'm up 120%. I haven't sold a single share. I bought all my shares right here. So I love buying and holding as my main strategy, but sometimes I do swing trade. I've swing traded a lot of stocks. Like Super Micro was a swing trade. Now we just own a couple shares left for fun. SoFi, I regret selling my SoFi. I sold a lot of SoFi. Reddit is kind of a short-term trade for me. I might sell out of Reddit. I don't know. I love Reddit right now. Toast. T-Mobile is my most recent purchase. T-Mobile, we've been buying the dip on that company. Anyway, let's keep going here. Goodness, okay, if I trade Bitcoin, trade in Robinhood. Thanks, man. Love your live chat. Hey, yo, Franco, I appreciate you, homie. Yeah, happy Sunday. Hope you're having a good Sunday, man. I just like being fully transparent. I show you all the stocks I own, how much I'm up and down on them. And I don't sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. I sell nothing. The only way to support me is you can hit the like button and subscribe if you want. I'd appreciate that. But anyway, yes, we got some big losers in here. This is why you got to be careful. I recommend if you want to buy a stock, you should do this. You should slowly buy into the company. You slowly buy it every single day. Don't just spend all your money at once buying a stock. But even if you do that advice where you slowly buy into it, you could still lose a lot of money. So you want to make sure you're buying into a high quality stock, like an Apple or Microsoft, or some of these other stocks we've been looking at recently. So let's keep going. Motor Oil, how's it going, dude? He said NINE energy stock. I actually haven't heard of this one. So 9 Energy Services. So, and I just tell you the truth, I don't, I just like being brutally honest here. So if we look at the top right, look at the market cap. This whole company is worth $43 million. So that's an extremely small company. This whole company is worth $43 million. So it doesn't take much to move this stock. So that's the truth. So let's see. Oh, so they just sell commodities. They sell cement. They sell tools, coiled tubing, and wire lines. So kind of like they sell some commodities. Let's see. Are they profitable? So yeah, that's the bad news. If we go to their net income right here, they're still losing net income every quarter. And again, the whole company, remember, was worth $40 million. The whole company is worth 45 million, and they're losing like 7 to 10 million a quarter. So they've literally lost their entire market cap of net income in the past year, and they have a lot of debt. That's super bad news. They have a lot of debt, and we go to the cash from operations. Let's hope. Ooh, so yeah, this negative cash from operations includes their negative interest payments. Nothing's really blowing me away here. It could be a fun little momentum swing trade, but again, $40 million company lost 40 million the past year. It's just tough. But they did go up the past couple of days. They did just like kind of rocket up. Are you into any blue chips? Are you bullish on gold? I think gold is close to a top. There's not much left in gold. Like if you buy gold, you could maybe get 30%, but it's tough to buy gold right now. Unless things really start to escalate again, there's more tariff fears, war fears. If the war starts escalation, gold's just gonna rocket. Banks have been buying gold like crazy. But someone said, "Are you into any blue chips?" Yeah, dude. So check this out. Constellation or McDonald's, great blue chip. Actually, McDonald's has one of the best charts of any blue chip ever. In 2008, this is such a recession-resistant stock. There was no dip in 2008. McDonald's does great in a recession. McDonald's actually bought a bunch of cheap land in 2008. McDonald's is actually a royalty real estate company. If you go spend $100 at McDonald's, $4 of that goes back to this stock. This parent company has a high margin royalty. And for 80% of the stores, McDonald's owns the land under it. So they collect those rents from all their tenants as well. So anyway, McDonald's is a great blue chip. I got Meta. You can't go wrong with Meta. They own Instagram, Facebook. They have so many daily active users. Google as well. Google, I got 19 shares of them. So, actually, I want to look at Meta real quick. Then we'll look at GEV. GEV is cool. So here's Meta right here. They on Facebook, Instagram. Dude, can you believe this? Meta bought Instagram. I think it was 2016. They bought it for $1 billion. And Instagram today is worth, I think, just on its own, like 300 to 400 billion. Think about that's crazy. Anyway, look at this right here about Meta. This is crazy. If we look at their active users, they literally have 3.4 billion daily active users. They own WhatsApp, Facebook, and Instagram, and they're a huge advertising play. And this net income is ridiculous. They're getting close up to Google and Apple's type of net income. Meta's really coming up for them. They're making literally close to 20 billion a quarter now, and this margin growth is incredible. You go spend $100 on Instagram ads, $40 of that is after-tax net profit for Meta. Incredible margins. Anyway, they just acquired Scale AI. That's going to add over 300 million of revenue a quarter, and they're profitable. Meta's so cool. Favorite stock here is GEV. Yeah, GEV, Constellation Energy, they really benefit from the nuclear energy benefits from the tax credits and stuff like that. So yeah, GE Veranova, they're a clean energy play. They own some nuclear reactors. Yeah, so look at that. Power, electrification, they own some wind assets. And look at this net income. They're actually making a lot of net income now the past year. If you average it out, was that real? Yeah. They're making if you average it out, hundreds of millions in net income a quarter. They do have a dividend, an extremely low yield, a 0.05% dividend, but you're really buying them for the dividend growth and the, I forget what it's called. Is it PTC price? I don't forget, or Epcot. They're like the Epcot electrification. Anyway, G Veranova, green energy play. They follow Constellation Energy. They're doing great. Charge your phone. Yeah, dude, my phone, look at that. We're on 12%. We got to hustle here. I am going to end the stream in a little bit. So if you guys got any last minute stocks, I'll probably stream for another 10, 20 minutes. If you got any last minute stocks you want to look at, let me know. I got you. And I hope you're having a great Sunday, by the way. We're going to see, the stock market, I don't think is going to be too red tomorrow. Honestly, stocks aren't that down bad. Meta's down 0.6. Google's down 0.8. That's like an average day for them. And the SPY's actually recovering. Look at that. Only down 0.36%. So tomorrow we might secretly go green. But anyway, someone said GE Aerospace. This is a great company right here. It's a great stock. And we were just looking at GE Veranova. They split off. Yo, givers, takers. I forgot to read your chat. Gonna run. Just wanted to say nice work. Have a green week. Yo, givers, takers. I'm so sorry I didn't read that. Hope you're having a great day as well. But yeah, GE Aerospace, they repair commercial jet engines. Oh yeah, look at that. Commercial engines and servicing. That's where most of the revenue comes from, and it's up 15%. It's up double digits. You get a nice dividend growth here, 0.6% yield, very low payout ratio. And look at this net income, and they're making like $2 billion a quarter now. So incredible net income on GE. I missed out on them. And as the war fears escalate, GE is going to benefit. They're another aerospace defense company. They were like every when planes fly, it, you don't measure it in miles. They're measured in like hours flight. And after like every 100, 200 hours, they have to always be serviced. And GE Aerospace does that for a lot of the Boeing. Anyway, NCNA. Yo, what up, dude? Motor Oil said, NCNA stock, annual meeting this Friday. If Merck picks up drug, I'm hearing projected $25 to $100. So, hey, 25, that would be literally over 100x from here. That'd be interesting. So, yeah, here's the bad news. They're a $38 million company. So, and they're at all-time lows right now. So let's just judge this one for right now's financial. So remember that. This whole company is worth $38 million. So you could buy the whole company at a $38 million valuation, and they have no revenue. So look at that. This is a startup. So this is probably why the stock's at an all-time low. Their analysts are starting to question, and they're a British company. So this isn't a US company. So they have, you see, I'm on revenue and it says no data. That's because they've never sold anything. They don't sell a product or a service. This is a startup. And if you go to the net income, they're losing net income every quarter. So this company just isn't FDA approved. And I think maybe why the stock fell right here, like, look, the stock rallied and then fell. I think they might have gotten FDA rejection. I don't know. They just don't sell anything right now. So that's the one thing you got to be careful with. And that's why I think the stock's at all-time low. They literally just have no revenue. So that's the only bad news about it. So yeah, let's keep going here. Oh, InnoData. Hey, that's one I own in my Roth IRA. Check this out. So here's our main taxable account, but then we have our Roth IRA. How are we doing in the overnight market? So we're down 1%, but one of our best performing, why am I getting ads every 5 minutes? That is a great question. I wonder if I can like turn those off, dude. I didn't even know. This is like a vertical stream. There shouldn't even be any ads. I do apologize, Mac. Next time, I'm going to see if I can just completely disable them because I don't know why those are on. Anyway, here's InnoData right here. This is a great small cap. They're only a $1.3 billion company, so very small company. $1.3 billion, but guess who their top customers are? This company's top customers are literally Google, Microsoft, Amazon, Meta. Those are literally their top customers, 5 of the Magnificent 7. And look at the growth here. It's incredible. They do what Scale AI does. They do digital data solutions. And look at this. The revenue has exploded. It's up 157% from the previous year. That's what I like to look for in a company. Ones with when the revenue is increasing like this, the stock price will usually follow as well. So I love the digital data solutions. The net income super positive here. They're making net income every quarter. They have no net debt. The balance sheet just getting better and better every quarter. So yeah, I do like that one. Yo, free me. How's it going, dude? Hope you're having a good Sunday. Yeah, dude, it is hot. I have my fan on right now, and I'm wearing a tank top, and I'm still hot right now. So, yeah, if you got any last minute stocks you guys want me to look at, let me know. I'll check them out for you. So let's see. Oh, yeah. So this stock right here is one. I actually just made a YouTube video about this stock. My most recent YouTube video, I went over this stock, and I think you'll like this one because the valuation is really fair. Look at that. The stock went from 61, and now they're at $48. So go watch my most recent YouTube video if you want to learn more about this stock. But look at the dividend. They have a 3.7% dividend, and the payout ratio is just a 33%. They have so much room to raise their dividend. And they buy back. They have literally bought back 5% of the company since the previous year. So you own 5% more of the company in dividends or in share buybacks, and you get the 4% dividend. And look at the valuation. They just sell beer. So they own Molson Coors, Blue Moon beer. I don't even know if I can talk about this on YouTube, but they own a lot of those alcoholic beverages, and they just sell commodities, so they trade at a super low valuation, 9 times net income, but they're just super profitable, and you get the safe 4% dividend right there. So yeah, InnoData again sounds like a made-up office space movie company. InnoData, huh? That's interesting. What are we expecting from the market tomorrow? It's going to be 99 here in New York tomorrow. Dang. That's hot. Nearly 100 degrees. So yeah, the market, let's go see. Actually, the market shouldn't be too red tomorrow. I mean, I actually thought the market was going to be worse because Bitcoin's under 100,000, but look at that. The SPY is only down 0.3%. That's not that bad. Tesla's even green. If Tesla's green, a lot of other, hype, probably like a Palantir. Where's Palantir? Yeah, look at Palantir. They're green. They're up 0.7. So we might actually see we might see the NASDAQ go up tomorrow. So yeah, that'll be interesting. But it could go down, of course. Have you been picking up more Maine recently? Yeah, dude. I'm still at 10 shares. Yeah, it's tough to buy this one because they have been doing so good recently. I mean, for the BDC, they're not at under $50 anymore. But yeah, look at that. We get a $3 dividend. This is one of my higher yielding stocks, and they actually pay a monthly dividend. So because we own 10 shares, they pay me $3 every month. On top of the stock price appreciation, we're up 4% on our position, but let me actually show you this real quick. Main Street Capital, if you're looking for, a company that pays you monthly dividends, this could be a great one because they make so much money that sometimes they pay you twice in 1 month. So check this out. They normally pay you 25 cents, but check out this month right here. In between these two 25-cent months, they paid you an extra 30 cents per share. That's because they're making so much money. So right now, this is basic math. They pay you 25 cents a month. That's 75 cents a quarter. So the dividend costs 75 cents a quarter of EPS. And look how much EPS they're making every quarter. It's over $1. So this is a very sustainable, huge dividend. You get a 5.3% dividend, and the payout ratio is like a 63% or something. A very safe, very sustainable dividend. Again, not financial advice there. That's one of the companies that actually has to, by law, pay out most of the income they make in the form of a dividend. So let's see. July is going to be a huge dividend month for me. $60 just from SEIG. Yo, $60. That's incredible, dude. Like that could pay for like half a grocery bill, or that's food for anyway. Here's SEHD. Let's go check them out. Their top holdings are a lot of the higher yielding plays. So yeah, if you're don't want to risk your money in an individual stock, you're looking for a high dividend yield, but you don't want to buy just one stock with the high yield, check out SEHD. Look how diversified that they are. Their largest holding is only 4%. So 4% of you put $100 in this company, $4.40 goes to ConocoPhillips, $4 goes to Cisco, $4 goes to Altria, then Coca-Cola, Chevron, Lockheed Martin, Verizon, Home Depot. I mean, these are all companies I've heard of before in the S&P 500 that have great dividend growth rates. So yeah, SEHD is very cool as a dividend growth stock. And actually, one of the main stocks, or a lot of stocks in SEHD, are like the Warren Buffett type stocks. Let me go to Buffett's portfolio really quickly. Check this out. Here's Warren Buffett's portfolio. His largest holding is, of course, Apple. He's a super investor. Literally, with the SEC, he has to report all his holdings. He owns Bank of America and then Coca-Cola. Coca-Cola is 10% of his portfolio. Then Chevron, then Oxy Petroleum, then Kraft Heinz. He owns Kraft Heinz. Actually, cool thing about Kraft Heinz, they just announced by 2027, there will be no artificial dyes in their products. Like if you heard of yellow 40, or is it like red 40, yellow 10? They're not going to use any of those completely by the year 2027, which is actually cool news. Kraft Heinz stock has just not done good though. When they IPO'd, their largest shareholders just milked the company for the dividend, and there was just no money left for them to reinvest in the business. You get a crazy 6% dividend yield here. The payout ratio is a 70%. So anyway, Kraft Heinz is interesting, but yeah, anyway, that was the stream. I hope you guys have a great Sunday. I'll give you a quick portfolio update before we run off here. But yeah, I'll see y'all next week. If you want to hit the subscribe button, we stream all the time. And by the way, if you want to help me, or if you want to get this brokerage I'm on, if you're new to investing, check out this app right here if you want to get it. It's called Moomoo. If you go to that link right there, the link tree in my bio, the very first link if you want to download this app. I love this one. That's where I was tracking all the super investors' portfolio. You can see Nancy Pelosi's portfolio. We can see her top holdings because she's a super investor. We can see all of her most recent trades and stuff like that. It's a free app. And if you want to check, or it's free software, if you want to check it out, Linktree right there. It's the first link there. They got a lot of watches here. Quantum computing, high dividend stocks, Kathy Wood's portfolio, the DeepSeek beneficiaries, China tariff tech. And I just love all the analysis that you can do. If we just look at Amazon, for example, they give you the Morningstar research right here. So we can see what Morningstar has to say. So for all your stocks, you can read hey, what did the bulls say? What did the bears say about Amazon? You can see where the revenue comes from. like their Amazon Web Services. You can see where the revenue comes internationally, like 68% of Amazon's revenue comes from the US. Anyway, if you want to get this app, link tree in bio, first link, it's called Moomoo. But yeah, hope you have a great rest of your day. That was the stream. I'll see y'all in the next one. Y'all are amazing.